Good morning. If somebody can let me know that the mic's working, I'd appreciate it. I can always go up and test, I guess, and open up sound. Let's see. Just like to make sure the mic's working before I continue on. All right, looks like we're good to go. So let me kill that. This is the last day of the week for us with this ORB strategy as we're testing it out. Again, we had great back test on it and testing that with just the 3 contracts and, going back and testing it not only on Nasdaq, but then ES. I haven't run the test on Russell and Dow yet. So, but what I did do was go back and look at levels they had hit. Okay, so let's go right into that as I'm getting a little late start. Where's everything at? All right. So, again, session rules, we're looking to take every trade between 10 a.m. and noon with this. And then as long as we take a positive trade, we can be done for the day. Okay, that's an option is what it is. So, again, everybody's going to look at this and kind of tweak it a little bit to suit their own needs or wants, okay? Don't get greedy, So again, if you are in a good profitable position in the morning, then you don't need to trade in the afternoon, okay? If you take no winning trades, you have no winning trades in the morning between 10 a.m. and noon, then obviously we're looking to trade during that redemption period. That's just something I'm calling it, between 12 p.m. and 4. Because if it goes sideways between 10 a.m. and noon, it might put us in only to reverse or only to pull back and put us in again either same direction, second trade, or opposite direction for a second trade. So that being said, if that's what it does in the morning, well, then it's created a higher high, a higher low, but pulled back in that zone, and we're looking at that sideways movement still. So we'd expect that to break out at some point in time, right? And so hopefully that happens during that redemption period then where we could possibly have that runner on to help make up for, especially if we take 2 losses. So hopefully that redemption period trade covers at least one of the trades, if not both. So if you only have 1 loss, you should be a break-even day or possibly it would be a small negative break-even or a positive trade. If you take 2 trades, then you're looking at it to cover at least one of those. So you have less of a loss on the day, okay? So that's the rules, pretty simple. We are taking a buy above the high or the low, and we are waiting the first half hour. Because, again, during my back test, I'd seen too many times between 9:45 and 10, it would actually break. If you're using the first 15 minutes, 9:30, 9:45, it would break out past the lower high, put you in only to reverse. So not looking to take a loss in the first 15 minutes of trading, right? So with that being said, seeing that more times than not, that was just not something I wanted to be involved in. I did not update yesterday's chart, so that's not an accurate chart for yesterday. It's out on, I'll go out in the Discord and pull it up. Actually, we'll just look at it live in my charting. Because this is an image, so I have to manually upload it. Let me go back to this. All right, so here's where we're sitting on, I know you can't really see Nasdaq. It's behind my head here. And there is, let's see, if I insert a column here and drag it over, I can pop this over where you can see all of them. All right. So this is at a glance still our where I sat in the back test. So again, with this, what I'm looking to do in tracking this, again, because we're looking to see how profitable can we be trading this, how many times does it actually break and go to another level. So again, my green levels on this, you'll see level 1 is in PT1, kind of a pinkish. 2 is yellow, for caution, if you will, that's a good level that we want to be aware of. So that's why I colored it different. So it's okay if that's all we get to is PT2, because if we get to PT2, that means we've moved our stop on our runner to PT1, and we've already closed out partial. So that would be a good trade. Okay, good positive trade on the day. If that's all we get, okay, is PT2. So we want to look for, look over these and look to see which ones have from PT2 on. We don't want to see a lot of PT1s, and that's it. We definitely don't want to see a lot of PT1s that have 2 trades or 3 trades. The green starts at PT level 3, which means that we would have profited, closed partial, and it also means that on our runner, we would have moved our stop to PT level 2, okay? So got 2 times the stop level on that. And of course, 4 and beyond, that's just even more profit. So the reason why I made the tracker up is so that we can go sort. You know, you can sit and sort S&P, and we can see how many times, look how many times, 5 times out of these trade days. I'm not going to count how many days it was, but from April 16th to May 2nd, or not May 2nd, to today, sorry, or yesterday, it hit 5 times. And it's probably not April 16th, guys. I'd have to resort it back. Let's see. April 14th. So April 14th. We had 5 times where it hit PT level 4, right? So that's great. Our stop loss, and this is closed past, okay? It may have almost got to PT5 on any one of these. So what I'm concerned with is when we moved our stop. So if it candle closes past PT level 4, then we move our stop, and our stop would be at PT level 3, okay? So these are great trades, and we, you know, here we have a 5, which is even better, more profit. So that's what we're looking at, is how they stack up against each other. So in this case, as we're looking at, again, S&P here, that PT level 2, we've got, it's at number 13 on here on the countdown on the side, and we've got a header row, so that would be 12 trades. So 12 days out of these days, from April 14th to yesterday, we've had PT level 2 and beyond, okay? So that tells me, this tells me right here that I would have, again, if it's PT level 2, it just means that we weren't break even on our runner. We actually, our runner was closed out at the same time as our closed partial. Why is that important? If I look at these rows, and if all this said was PT level 2, all of them, if they all were PT level 2, okay, that's as high as it's hit. Well, that means to me that on my partial, I would have closed out, kept my runner on, and when it closed past PT level 2, I would have moved my runner to PT level 1, which is exactly where we'd closed out the partials, meaning that we could have just closed the whole thing out when it hit PT level 1. So that would be if we saw all PT level 2s. If these were all PT level 2s, then I could sit there and say, well, when I get in, if that's all it goes to is close past PT level 2 and I move my stop to PT level 1, I might as well just close it out with the rest and just close the whole trade at PT level 1. Boom, in and out, done for a day. But we're not seeing that, okay? We're not seeing it just hit PT level 3 or 2. We're seeing it hit 3, 4, and even some 5s. So that's why I'm collecting this data. Again, you can go out for each one. I don't want to spend a whole lot of time on this. We'll get out to charting. And you look, only Nasdaq hasn't done as well, right? You have some PT level 3s and 4 and 5. Goes down to also only 11 trades. Okay, it was 12 on ES. So far, ES has fared out the best on these. Let's sort Dow. Here's Dow. So this is just the data I'm collecting to look at. Level 3s, level 4, 5. We even hit the 5 here. So, and then let's sort Russell. Russell, we have one time it hit level 4. But if you look, PT level 2 is up here at row 13, so 12 days. 12 days where it hit PT level 2 and beyond. I didn't look at the days here on Dow. So Dow, if we look at PT level 2, which is this row, that is 10 days, okay, that it hit PT level 2 and beyond. So again, the more times it hit PT level 2, If that's all it hit, then I would say to myself, I'd say, okay, it's not worth having a runner. We just close it all, and that's it. So far, again, S&P has done the best as far as follow through. Okay. Again, we've had on it, it's at row 13, so we have 12 days where it hit PT level 2 and beyond. And here's where we're actually banking more. Level 3, 4, and on, a higher, level 3, 4, 5, 6, those levels were making extra profit on the runner. Level 3, closed pass, we'd have our stop at level 2. So, again, 12 days on Russell, and we've got 7 days, 7 out of those 12 days, that we profited more by leaving a runner on, okay? So that's the data I'm looking at. And to me, that looks good, right? 7 days out of 12 that by leaving a runner on, I captured more profit than I would have if I just closed the whole thing out. So to me, that being said, it looks like runners are working on this strategy so far. And that's what we did the live test for. And that's what we're trading it for right now. I don't know why these charts shift around on my screen, guys. It happens a lot. That's normally not the position of where this one was. What do we want to look at? On the Discord out there in, let me get it to refresh, and then we'll get out to charts because we got a few minutes left. So on the ORB strategy out here in the Discord, again, I post the charts normally. So here's where we had, this was our quad chart, and you'll see that we closed past level 4 on Nasdaq. We closed past level 5 yesterday on Dow. We closed past level 4 on Russell, which means our stop would be at 3 again on Dow and S&P. When they closed past level 4 and 5 here, we would have trailed our stop one back. Okay, trailed it tighter. And this is the one we were in on Nasdaq. So I do have the line still on that. I forgot to clear them before I took the picture. So Nasdaq, we know that it actually closed past level 3. Stop was moved under level 2, and then we got stopped down on a trade, or I got stopped down on a trade. So we took a short in here in the morning and actually profited before that. So that's the Nasdaq chart. Again, took a short on this candle close under that low, sat in the negative right off the bat. And if you took the first 15 minutes and sat up and got in, you sat in the negative as well. But what's important to notice is it only went to PT level 1, and then it turned, okay? Had a big sweep up, and then we took that breakout of the top. So the trades were here on yesterday. So we took a trade where the initial close profit, 2 contracts, was closed out for 203. I moved my stop, evidently not quite to break even. We got that $1.50 in the negative. And then the second trade, 178 on closing partial and 158 on the runner. So if we would have closed out all 3 at take profit 1, PT1, well then you could add half of this 178, add it on, and that's what you would have got. That would have been your total, okay? So what is that? $80, $85, $90. Oh, it's almost $90. So $90 each contract for 180. We're close to 180. Half that's 90. So we'd close 2 contracts. That'd be $90 per contract. So if we would have closed all 3, we would have got another $90 added to that. Instead, we got 158 on the runner. So by leaving the runner on, it actually banked 158 instead of 90. All right. So it banked $68 more. So we got $68 extra on the runner by leaving it on. And you have to decide, is that something you want to do? Or you could close it all. And again, this guys, you can adapt this. You got a doctor's appointment coming up, at noon or 1, and you've got to go. You got to get ready. You got to go. You may have to run some errands before. So, yeah, you can close the whole thing out if you want. that's totally up to you. But we actually are getting more on the runner. That's what we're looking at. That's the data we're looking for. All right. Let me kind of move this off the screen and we'll get over to the charting quickly because we're got about 6 minutes here. Anybody got any questions for me? If you do, just pop them in the chat. All right, so something else I want to show. I'm going to switch this over here. Let me get some things fixed here. I'm trying to make sure the live stream's caught up. That might be why that doesn't populate. So we got about 5 minutes left before we start, or before 10 o'clock. So look, I want you to look at the bottom of the screen. Now, I didn't tell you guys I was doing this. So here's Nasdaq. We'll open it up and kind of get ready for our session. Here's our 945. So something I want to look at. Again, I've got the vertical lines marked at 945 so that we can see, is this strategy, would this strategy work better if we wait and set out, the first 15 minutes only, 930 to 945, and take the trade when the candle closes past the low, which it already has? Or would it be better for us to just wait out the other 15 minutes? Okay, so I'll take a box and kind of mark it from the high wick up there, and then we have our low wick right here, and I'll stretch that over. So I like to have this box here just so I can see what's happening on the first 15 minutes, or what if we would have seen that. I thought I sent that to the back. I don't know why it's not. There we go. So as of right now, if you were only looking to wait out the first 15 minutes and then look for a candle to close past the low, you would be in right now. So that trader is in, or should be in, unless they're waiting on a pullback. And if they're waiting on a pullback just off price movement, just off price pullback, not looking for a red candle, you're just looking for, after you get in, for price to pull back, and then you might get in now, okay? Or the other traders are waiting for, again, okay, I like to see that push. I want to see it pull back, and then I want to see a red candle, and boom, I'm in, okay? Such as the move we just had here. We had a push down, we had a pullback, a red candle. So that might be what some traders are waiting on right now, because I do know a lot of people will wait for that pullback. It gets you in at a better price on pullback. So look down at the bottom of the screen, and we have our total for the week. We're at 478. Now I'm going to switch something real quick. You'll notice the total right now is 190 or 1954, right? Again, our total for the week, 478. What's 4 times that? It's like 1912. So I'm up 1954. So what you guys didn't know, and I didn't tell you I was going to do, because you guys know on the slideshows that I went over, the videos I posted, I went over trading this strategy with 3 contracts, closing off 2, letting 1 runner. But then I also did a multiplier at the end. What if you multiplied that times 2? Traded 6 contracts, or times 3, traded 9 contracts, or times 4, trading 12 contracts. So on my other screen over here, that's exactly what I did. As we were taking trades, or as I was taking a trade in here on the 4 time, or the regular 3 contracts, I actually on the other screen was taking a separate account that I made up, trading 4 times that. And it's gotten 1954 for the week. So half that would be what? 6 times. So it would be 1,000. So 3 contracts right now has only gave us $478 in the week. Double that, you would have over 800. Okay, you would have 900 and something, which is a good week, right? $1,000 a week, that's $4,000 a month. That's a living. Okay, you should be able to pay your bills off that. That's how I look at it. So if we just would have traded double that, then again, there's our 10 o'clock. So we got to watch what's going on. But if you would have traded 6 contracts this week, then again, you're almost at 1,000 we still got today. And then, of course, I did 12 here, and that's why it's 1954. So it's a little bit above the 4 times because I have to place trade here, and then I got to go over there and place trade. And sometimes it's already moved. And some I close trades here. Then when I go over there and close a trade, it what do I want to say? It might profit a little more because it's still moving again. All right, so we're gonna wait it out and see what happens. So now it's time we're waiting and looking. The one main caution I can have is, of course, you see the red zone there. That red zone is again off the 4-hour time frame. That's where we're at right now. We're in that red zone. So that to me is a cautionary zone because it may not get and stay above that. If we look at 4-hour candles, you can see these wicks here where it got and above. So at the end of the day today, I am going to be, since we pushed above that this week, I am going to be moving this zone. This is no longer going to be my upper zone. And since the wicks are long on the 4-hour, I'm going to have to drop down to a 1-hour and see these 2 wicks, this wick right here on this green candle. That's where I'm going to draw my zone from. I'll come in with the new zone here and pop it at the top of that candle. I'll do it real quick if I can get it in here, because I need to get back out and make sure we're not breaking that high. Oh, it's a small wick. It's very small. Because I don't want to miss our entry. We'll go ahead and pop that on, and we're going to put this as upper zone. I want to be aware of that level right now, so we'll pop that on the chart. See how close it is. So it's not in the way of level 1. So if we break out the top and go to test the top of those wicks on those 4-hour candles, then we should be able to get to PT1 right here. Okay, so I need to get this ready. Didn't have it ready. So I have 3 contracts locked and loaded. I have 12 contracts locked and loaded on the other account. So that's something I can't forget to do. Once I place the trade in here, I have to go over there and place the trade, because I almost forgot yesterday on the breakout through the high. All right, so here we're waiting. Well, we're waiting on that close. Now, again, with the rules I set for myself and how I back tested this was I actually took a candle close past the high and low. That's just the rules I set up to test it. We can always adapt from there, right? So my plan was if a candle closes above the high, I'm going to buy. If candle closes below the low, I'm going to sell. Those were my rules for the back testing, so I kept those rules today. It hits PT1, then when it hits PT1, then we would move our stop to close 2 and move our stop to break even. Okay, so that's the rules I set on this. Now, that being said, you can always adapt and change the rules a little bit or tweak them. And if you wait for pullbacks, then once it closes past, you'd wait for a pullback to get in. So everything looks good so far. I like the way we're set up. Thanks. I don't set up the pre-orders. You know, we're going to wait for a breakout because sometimes it'll break and then just kind of scoot. So we have to wait for a trade before we do anything. We're going to look at the swings, high and low. So far, we are still in a little bullish movement over here from this morning. I'm not turning the power trade indicator on because we traded without it this week. I do look at that at the end of day or after we're done in here. I do turn it on to see, where did the power trade indicator signal, on these moves. And that's what I'm looking at as well. Where did it say to buy and sell? And a lot of times it's lined up with these sells and buys. And it might have some extras. So we're just going to wait for the breakout. So nothing too exciting. So good results. Oh, and I didn't add the to the 478 at the bottom. Don't forget we have this. This, where is it? Negative 64. So remember, on one of the trades, because I traded it kind of like I usually do, and that's what's kind of weird for me is we're getting profit target 1 off the PT signals, the power trade signals, and it hits profit target 1. We close out partial and move our stop halfway to break even. Okay, is what I typically will do. So back to this negative 64, and I mentioned this yesterday. On that trade, I moved my stop the way I typically would. That's not the way I set up the strategy. On the strategy, I was moving my stop to break even when it hit PT1. So on here, it just was a habit for me to move it where I normally move it, which was halfway to break even, and that's why it's negative. So that really should be positive on our total. So that's something to keep in mind. That should be included in our profits because that was something that I didn't do. I didn't move to break even on that trade because I'm used to moving it halfway. So I just wanted to point it out yesterday. So we're actually over 5 on the week, which is, a little more than 64 to that. So we're a little over 100 today. So far it's worked out okay for the week, not the best. We'll turn this over to the order window. What do we got left? We got about minute 40 on this candle to wait. And I'll look to, over the weekend, run the test on the, to get us a full profit number on Russell and Dow. And I may not do Russell, guys. I may just do Dow. Because the Russell overall hasn't panned. It's been the worst. Looking at that spreadsheet. As far as our profit target. So far, S&P's in the lead, and then Nasdaq's second, and then Dow's third on that sheet as far as hitting profit targets. And you can always put, instead of, doing, of course, I ran the test with 12 on the other account. So if you were looking to do this and instead of trading 3 on here, trading 6, as long as you can stay focused, you could do 3 on here and 3 on S&P. And that way one of them's going to break and go to a higher target. So they move in sync, but sometimes they do reach out a little further, as you can see on those numbers. So that's why we have that spreadsheet. All right, let's see what we got. All right, we got a new candle just started. Because again, on S&P, out of the 12 days I'm looking at here, I'm looking at it. So we had 12 days where it hit PT level 2 and beyond. 1, 2, 3, 4, 5 of those 12 days it hit PT level 2, which means our stop would have been moved at PT level 1. So at that point, we could have just closed the whole trade out at PT level 1. However, 2 other trades, it hit PT level 3, so we would have squeaked out another profit target level. So we would have squeaked out another level of profit, and then the others it hit level 4. So again, S&P, then Nasdaq, then Dow and Russell. Just checking a few things as we wait. Good morning, MC. This is the worst part in trading. Well, not the worst, but certainly up there. Just the waiting. Hurry up and wait. Don't forget the motto, you get what you get and you don't throw a fit. If you take a loss, you move on to the next trade. That was my coffee delivery. All right. All right, so nothing exciting yet. Nice push back and forth. If you notice the moves right now, it's nothing but sideways, and we're actually staying to the top of this. Right now, it stayed between the top of the box, between the high and low. So we're staying in the upper half of that zone, and we know it's not going to stay there. It's just something to be aware of. It's something to watch. We look, it's tight, it's consolidated up in here, and it's going to break one way or another. If you don't see swings, and you see just a lot of big candles back and forth, or moves in one way or another, but they're bigger candles, just back and forth, and you can't really make sense of it, don't be afraid to dial down to a 1 minute time frame to look at the swings. Okay, you don't have to stay on the 1 minute time frame, but you can go down the 1 minute time frame and just look at the swings, look at the motion of the chart. Okay, look at the motion of the candles, the movement, because that's your price action. That's your action on the chart. Is it a bearish pattern? Is it a bullish pattern? Over here, we made a low, we made a high. Okay, and then we actually made a lower low, lower high, lower low. So it looked like it was going to be, well, it was bearish over here. We had a bearish pattern over here, bearish structure. So I was waiting to see, of course, if we break through the bottom. Because if bearish structure stayed in place and it would break out the bottom, it would make sense to me. If I was drawing my trend lines today, I would have had a trend line here to here, okay? That would be my downtrend line, and look to see if it follows that, okay, during that after 10. Well, we didn't get that, okay? So I didn't have my line here because we're not using them. But that's what I was looking at because I peeked out a little bit earlier at the chart. But again, we're on the 3 minute. So that's what the trend line looks, or trade line looks on the 3 minute. But again, if you can't really make sense of the moves, you want to see a little bit more detail, okay? I want to see a little more detail because I can't really make sense of what I'm seeing in here, let's say. Then go down to a 1 minute time frame. There's nothing wrong with that. Go down to the smaller time frame. If you're on the 15-minute chart and you're trading a 15-minute chart, okay, dial down to a lower time frame, like a 5, to see the swings. If you're a 4-hour chart trader and you trade the 4-hour time frame, okay, and you're looking for an entry and you can't really make sense of the candle moves, dial down to a 1 hour, okay? The way I started was taught to look at the daily, the 4 hour, and the 1 hour, and I was entering on the 15-minute. So with us, we look at the 4 hour, the 1 hour, and 15-minute, and we're either on the 5 or 3, personal preference. I'm on the 3, and we're taking the trade. So it's 4 time frames. You always want to look at the 3 higher. So it's okay, again, to dial down to a 1 minute, and then, draw that line, okay? Because, again, we were after here, when it made this lower low, it pulls back, and then it pushed here before 10, and you want to say, okay, looks good to me, right? We have a high, we have a lower low, we have a lower high, lower low. Draw that trend line down there, draw that trade line. And then we're looking to see, is it just going to pull back to that and turn and bounce, and boom, there's our, after 10 breakout. That would have been great. And that's what I was looking for. We didn't get it. Okay, so taking this line off the chart. And we'll go back to the 3 minute. But again, don't be afraid to dial down to a 1. There's nothing wrong with dialing down to that smaller time frame. We're not going to stay on the 1 to trade. Now, last night I did some posts. I guess I can go over that while I'm in here. Let me see. Let me go back and find these. Just bear with me. All right, so we're still in that, again, right as of right now, we're still in that sideways area. I don't want to stay off the chart long. All right, so I'm going to go over this real quick, but I want to pull this over. Let me do a couple things. All right, I want to be able to see where we're at. So as of right now, too, I'm going to close the trade window, which will move our P&L off the chart where we can see. So we're still watching the chart over here for our break, okay? So we're getting a huge drop, so we need to pay attention to that, so don't let me take you off track. So this was a trade I entered last night on S&P, okay? I had the power trade indicator on, so I got a buy signal down here. I bought. It had moved up, and I left all the contracts on. On this one, I was like, you know what? I'm just going to leave them all on. I'm not even going to close partial. I'm going to look to close out the entire trade, okay? So took that break, got in the trade. It was up, about 2 there. 2,200 almost, and then it jumped, it kept rising, kept climbing. So all I did, if you notice, was I just moved my stop. Okay, my stop was at 56.86 here. Stop was still at the 56.89. I squeaked it up a little bit, not much, and it was up about 3. Okay. And then, let's see, that's just another chart. What were we up here? Almost up to 3K here. And then, I closed out there. So when it got up around 3K, just look at how extended that is. It's just a huge upward, straight up the chart. The rocket took off, and it had already moved quite a bit. And I'm like, I'm not going to try and get greedy. I don't want to give back a lot of this profit. If you look at where my stop is on this trade, my stop is about a quarter of the way back. From where my entry was and where the price is up here, my stop was a quarter of the way back, or a third of the way back. It was right around, I think, quarter. No, it was a third. Yeah. Here's 1, 2. Yeah, about a third of the way back. Somewhere in that range between quarter and third. So I just didn't want to give all that back. I was up 2,900. Again, giving a quarter of that back or a third of that back was just not something I wanted to see happen. Well, how can I, do I want to just close it all out and just bank the whole 3K and be done? I like to leave runners on in case there's more, in case it goes. So I did close out 3/4 of the trade. I left 5 on out of the 30. So I closed out and left 5 contracts on, and then it turned, and it went back and stopped me out. So I don't know. Here's the stop out. Is that the stop out? Right here, yeah. And notice I put the trail on. So the power trade indicator, for those of you that have it, it does have the trail feature built in now, and I'll pop that out and give you guys access to that one. So I did put the trail feature on as far as using the trail for our stop, and that's what allowed me to keep. I kept trailing my stop. Toward the end, I put it on tight and left that trail line on tight for my stop, and then, of course, had my stop moved up, and then, of course, got stopped out up in there. So, but it is built in now. All right, so we got to close, or we're still waiting like 5 seconds. I'm ready to pull the trigger here. And we'll turn this back to the regular screen share, and we'll put that back up so our P&L is showing. All right, so we just got the close. I'm going to sell. So again, the one thing to this strategy right here that does not appeal to me, there's a couple, is one, our stop loss is back here, mid-level. And two, the PT1 is close. Okay, that would be where Nasdaq typically has only gone to PT1 a lot of the time. Okay, so we would put our sell order on, our buy limit to close 2. If I put it right there, we're not at true 1-to-1. We're lopsided on our risk to reward. That does not appeal to me at all. I don't like that. So we're putting up more risk than what we're gaining on the partials. So for me, I just don't like doing that. I'm not going to say it's a red flag. I know people do it all the time. But for me, it's not something I like to see. I'd rather see that at a minimum 1-to-1, true 1-to-1, like about in here, or 1.5-to-1, or a 2-to-1, okay, profit. But that being said, you have to look at the moves. That's solely what this is based on. This is based on the new moves. This is based on the fact that Nasdaq, sometimes it only gets to this first level after breaking the low. That's it. Okay? So if that's what I see historically, if I see historically that it barely gets to PT1 here off the indicator, and that historically is barely what it gets to, well then I should consider closing partial there. And also where the stop is halfway, that decision was made because a lot of times after putting you in, you get that pullback and it was passing the quarter mark, okay? And the quarter mark would be, of course, a quarter of the way back. It's about where that one line is right here. Why are we not? Oh, it's way up there, guys. Sorry. It turned the magnet off. So again, you have to decide for yourself if you're going to, let's get a stop marker here. If you're going to tweak that, again, we're in testing phase, live forward testing. We already tested back. Historically, again, we were lucky if Nasdaq went to PT1 during the day. Okay? This is not a big breakout. Okay? All right, we'll see you later. Have a good weekend. We'll see you on Monday. So historically, again, we're lucky if it goes to PT1. So if that's the case, again, we're looking at historical data. We're looking at the past moves so that we can make a determination. Is it worth trading? Is it worth when we trade, can we shoot for a true 1-to-1 on our stop, or can we shoot for 1.5 to 1 or 2 to 1? Well, typically it doesn't go 1.5, or it doesn't go to PT2. So if I look back and for the last 6 months, it barely hit PT1, you better believe I'm going to close out partial at PT1. Why would I expect more? Why would I expect this to get down here to 1.5 times my risk up here? Why would I expect it to do that if after breaking the first half-hour low, it always goes to PT1? It's telling me what I need to know. It's telling me, yeah, this is a valid strategy, getting in when a candle closes below the low. Get in the trade. If I look back over the last 16 months and it breaks and follows through, or 6 months, whatever, but what is historical data telling me when I go back in the charts? It also is telling me that, hey, I only get to PT1, and then I'm exhausted and I turn. So if you're thinking about pulling partial, do it now. You know, if that's what the charts are telling me, that's what I'm going to do. We're looking at what the charts are telling us, what the movements are telling us. How many times does it get to that single target, and that's it? Okay, so it's going to be lopsided because, again, having our stop quarter way back, which would be about in here, if you got in on the candle close and you, and I need to pull this to break even. If you got in on the candle close and you put your stop quarter of the way back, okay, a lot of times you got stopped out only for it to keep going. So again, looking at historical data, a lot of times it got stopped out. So we'll move our stop to the break-even point. So I want to, I'm not going to worry about trying to get it dead on. There we go. So we're up 81, we're waiting, and we're not going to move our stop again unless it goes and closes below PT2. So this is a decent trade. Where are we at? Not even the first half hour. I mean, we're within the first half hour time span. And we got our profit. Let's look and see what it was. We got 118. So decent profit. Oh, crap, guys. You guys let me forget. I did not place the trade on the 12 times account. I'm not blaming you guys. I forgot. I should have put a text on here. Something like this. You know, something so that something like that. I should have put that. That's my bad. I knew that would happen this week because I kept saying to myself every time before I started the live was like, okay, you're going to place a trade live and don't forget the 12 times account. Don't forget to place a trade in there. And I did the last day, and it's moving. So I did forget to do that. So we can just multiply this, whatever we get today. Now we hit PT2, so we need to find our stop here. Come on, give it to me. There it is. And we need to move it to PT1. Okay, so as of right now, if it comes back and stops us out, right? If it comes back and stops us out, then we would lose back nothing on our runner, but we're not going to gain anything either. So if this is all it did every single time, if it hit PT level 2 every time, and I mentioned this, as we look back at that spreadsheet, if it always hit PT level 2, and of course then we'd move to PT level 1 our stop. If that's as furthest it goes and it always closes past PT level 2, and we saw it did that for the last 5 years. Last 5 years, it always gets to PT level 2 and pulls back and crosses PT level 1. then we would know over the last, whatever, 5 years, that if that's what it did, then we would have just been better, just as good closing it all off, right? Because we've moved our stop to PT level 1. That's where we closed out partial. That's where we closed out 2. So if it does not close past 3, we don't move our stop. So it could come down to 3 and pull back and stop us out. And again, we're on our runner. We're stopping out at the exact same point as we closed partial. If it's done that over the last 5 years, well, then I would have just closed all 3 at PT level 1. But it doesn't do that. We have back tested it. We looked at data. We looked at the move. And we know that, yes, sometimes they go to levels 3, 4, and 5, like we had back here. It goes to multiple levels. Not really on Nasdaq. So again, we're seeing that more on S&P and Dow and then Russell, with S&P being the lead on it. So what we're going to have to do is just basically take that. We locked in 100, and then we're in a not 12 times. We're in a 4 times account, 12 contracts on the other account. So we're over 450 on the other, almost 500 in the other account if I would have placed the trade when I placed this. So that's my bad. I forgot. Sorry. So been a good trade so far. I'm glad to see this because, again, wasn't looking the best for the week, the first 3 days. But here yesterday and today, yesterday we fared well, and then today we're doing good already. Not sure if we'll get another trade. We still got an hour and a half that if it happens to pull back and stop us out and pull back into that zone, and then break back out through the bottom again, we would take another sell. If it trucks through the zone and breaks out the top, we'd take a buy. So again, looking at, I'm not going to call it a cheat, anything else, but again, peeking out to the 4-hour time frame, the red zone that it broke, that is in play right here, this big red zone, is off these 4-hour candles. So that is something that you need to be aware of. And I don't think it matters to me, it doesn't matter what strategy you're using. Whether you're using moving averages, you're using the VWAP, you're using MACD, CCI, RSI, whatever you got on the chart, to me it doesn't matter. You should always go out to the 4-hour naked chart time frame and draw. If you're taking trades on these 5 and 3 minute, 10, 5 and 3 minute chart, you should always go out and look at the 4-hour time frame and find the zone high and low. You can find some mid-level zones in here. I don't really have any on the chart, but it would be for me looking at this level right here where this green candle came up and stopped. We turned. I'd be looking at that level. If you look to the right, that's where this candle closed. This green candle wicked up there. This candle came down and stopped right there. I want to pay attention to that price level, okay? And then if you look back to the left, surprise, surprise, you see where it pulled down and then popped back up. That candle stopped there, okay? Pulled back down, pulled back up to test it. That candle stopped there, okay? So I want to be aware of that particular price level right there. And then I come in and always mark mine as a 4-hour support resistance level. So that when I'm down on the smaller time frame trading, okay, I can see that level, which is right down here. Why would I want to pay attention to that level right there that I just marked? Well, I need to pay attention to that because, again, historically, right, back here, and even here, this candle rose up and stopped at that price. The market makers are trading off price. Okay? They're not marking trend lines and trade lines, and they're trading off price. Where's a good price for them to buy in? Where's a good price for them to sell off for profit? Or where's their price to sell in? And where's their price that they want to buy back to close for profit? That's what they're trading off of. So that being said, big candle went up, closed right there, right at that 4-hour level I just marked, right at this previous level. This green candle went up, closed near there. This red candle came down, did what? Closed near there. I need to pay attention because as we're dropping now, it may only get to the 4-hour level. Okay? That's my caution area right here. Okay? So you need to be aware of this level right here. You have to. Because it may not go past that. Now, it could cross it, because after all, we're trying to trade with the higher time frames. So we could see it go down to profit target levels. We could move our stop down, and it could go to profit level 4, which looks like 4 will come up around the 4-hour zone. Okay, and then it could go on further to level 5 or 6, but then come back through. And then again, because we're on a 3-minute, if you glance back out to that 1-hour and 4-hour, you're going to see candle closes. Where to us on a 3-minute, look, we're seeing candles go below this level. But if you back out to the 4-hour, all you're seeing is a wick. You'd be seeing a wick through. Well, where's that 4-hour candle going to close? Is it going to close below this level, or is the 4-hour candle going to close at this level? So it is something you should be very aware of. Something when I was trading one instrument and beginning, I learned, again, I was taking trades. We hit level 3, so I need to move my stop to level 2. So right now, again, we're looking at data. If Nasdaq typically goes to 1-to-1, why not just close out the whole trade? It's because of this. Some days they break and run. So let's try and get a little more profit. If we would have closed out all 3 here, we would be done. Okay? And again, when we moved our stop to break even, if it would not have got past level 2 and stopped us out, then we would have said, okay, we should just close out the whole trade. Okay? But I need to look at the data to make a decision for my daily trading rules. And my daily trading rules, I saw times where they did run, and I would love to be in on that and capture more profit. After all, we sat around and waited to get in a trade. I'm not looking for just small trades every time, so we're going to leave the runner on. So today it's really worked out so far. We're locking in an extra 134 on the runner. We only got 118 on the whole 2 contracts, the closed partial. So why did we close there? Again, you're saying, well, why would you close your partial there? Look at what you could have made. But the thing is, again, looking historically, dialing it back, looking at previous days, a lot of times it only went to 1-to-1 and turned around and stopped you out like way back here. Okay, so I'm going after the extra profit. I like to leave my winners run. And the only way to do that is either leave it all on and move your stop, or close partial and let it runner. And as far as leaving it all on and moving your stop, a lot of times, again, remember, it only gets to PT1. And if you don't move your stop at least to break even at that point, then you would lose out on a whole 3 contracts. Not interested in that. Not interested in bigger losses as a majority. So we're hitting that 4-hour level. I could be aggressive and move my stop down now, but I'm not gonna. My rules were I want to see a candle close, but we might see it turn here. We'll have to see what this candle does. So this is what's interesting to see right now. Is it going to actually go through the 4-hour level or not? So an aggressive move on a stop here would have been to, as it hit the 4-hour level, because that is our cautionary zone, to move our our stop down. So again, are we surprised? Is anyone in here surprised right now that it stopped right there at the 4-hour level, and it's pulled back? Now it could just be a stop and go, where we get a little pullback and then the next candle pushes through. I would love to see that. That's what I call them when they do something like this. It goes down, it stops, it pulls back one candle, and then it goes. That's my stop and go. Or it could pull down, stop, and go sideways in here, like this green candle here, and just went sideways for a little bit. Just take a pause, take a breather, it's like traveling down the highway. Traveling down the highway, you stop off at a rest stop. You know, you're going to take a little break. Are you just running to the bathroom? That's the one candle. The one candle is, hey, we just went on a bathroom break, and we're back on the road. If you see several candles, that's more like, hey, we sat down at the picnic table and, you know, rest for a little bit or something. Or put your head back, your seat back, and relax for half an hour before you left. So, might be a bad comparison, but that's the stop and go. So right now we're getting a big, healthy pullback on that. So again, two things I'm looking at now, particularly with it hitting the 4-hour zone. We knew that it was down at a 4-hour support resistance level. So it should not surprise you getting this pullback. So it pulled back and hit the PT3. So that's particularly something I'm looking at right now, because I did say when it hit the 4-hour level, you could have moved your stop aggressive and put your stop down here on that PT level 3. Okay. And I would be stopped out right now if I would have done that. Is that a better position than where I do end up getting stopped out eventually on this trade? So if it continues to pull back and stops me out, I'm happy, very happy with the profit overall on the trade. You have to be, okay? But we are looking to see if we can tweak it any other way. So we look and say, well, if I would have pulled my stop down here to level 3 when it hit the 4-hour, I would have made even more, another level of profit, okay? That's if it comes back and stops me out. That's why I'd be saying, well, you know, the warning signs were there that it could potentially pull back deeper or even reverse, because we did have the 4-hour level. So the warning signs were there. I chose not to move my stop, got stopped out here. If I would have moved it, and then the next time we could say, when we move our stop, we say, oh, I've seen this before. I played this game before, right? As it does something like this, you know, next week or week after. And you could sit there and go, oh, I've played this game before. I've seen this, seen how it plays out. So it hit the 4-hour level, you'd move your stop down. You'd catch that more profit. So, but what I'm interested in now is we got to look at two things. Does it break level 4 and close below level 4? Okay. At that point, I'll move my stop. Or does it come back and stop us out? We're looking at one of those two things. Does this come back and stop us out? Or does it go down and break and close below level 4? Which would be what? And I'm not marking highs and lows on these because we already have some lines on the charts. But this level 4 is right at that wick low, okay? So we'll see how it plays out. Right now, overall, we're almost 600 on the day. Add that, I keep forgetting, is that 64 or 68? It's 64. Add that 64 back in. All right, so we're going to... I did sneak in a trade on that. Remember, I didn't place the trade where I... So I did sneak in a trade on the 4 times account. There's the profit on it right now. It's 3K. So I did sneak in a trade. It was a little late. I just closed out partial 10. I put on 12 contracts on that one. Again, that's that 4 times account. So I did just close out 10 of the 12 contracts, locking in 1,100 on it, on that trade. And let's see, let me go back here. That's marking the trade. You'll see where I got in. So look at the comparison. So again, this is on the 12-time account. I told you guys I I forgot to place the trade when it broke out here and closed past on the 12 times account, and I didn't realize that till over here. So I went ahead and placed the trade anyways on the 10 or 12 contracts and just closed out, or 12 and just closed out 10. So I'm still up here, and I need to, my stop loss on this 4 times account, I'm just going to put it to break even on this one. Okay. So it's set on break even. So let me switch back to the other account. So decent profit on this trade as well, as it's up over 3. It's not a true 4-time account because I placed that trade late. So here we're getting that deeper pullback. You need to switch this over here. So when I click on the chart, it doesn't do that. Put an order up. So again, if I get stopped, I don't care that it's pulled back. I'd love to see it bounce here somewhere before it stops me out, only to go down. Something to always keep in mind when you're moving your stop. Now, I chose to do this during this test in live trading this week, was to trade this mechanically, trade this systematically, move the stop mechanically and systematically off the levels. That's what I've done. Traditional trading, I would not have my stop here. My stop would be up here. It's going to be above these highs. Price came down and dropped and closed. Price pulled back, and then price took off again. That high area right here off that green candle, that is where I'd want my stop, ideally, for me, trading. But again, back testing this is how I back test it. So this is how we're trading it this week. And but that's something you want to watch. You want to watch and say, okay, because I know that by putting my stop there at level 2, kind of putting it in the danger zone, right? There is nothing other than this little wick low, which is not strong. That's not a strong bearish wick, right? Wicks aren't strong. Candles are stronger. So that being said, we could see it blow past this wick. Right now it's hitting it. It may turn here still. I mean, there's hope, but the chances are that it can come back up to where this candle closed, okay? And that being said, or even here where this candle closed, where after it pulled back. So that being said, I got nothing. I got nothing in the line of defense, nothing in the way of that coming back and stopping me out. And that should be your thought process in trading, 100%. You should always be looking at the moves. Where's our high? Where's our low? Where's our inside top and bottom? And compare that to where price is now. And what price is doing, it's pulling back up. We're getting that retracement. If I wanted to draw, again, I'm not going to leave it on the chart. I've been drawing some here and there for you guys. But me, as a trader, I'm okay with the pullback, and I want to see when it breaks that retracement line. We only have a couple candles here, so I'll draw it on here. We have 2 wicks right here, right? Let me hit the magnet because I'm going to switch here in a minute. So we have these 2 wicks here. Is it on the bottom? All right. The chart moved on me. All right, so we have the 2 wicks there. We'd come out and draw that as a retracement line up, and we're looking for it to break that level for continuation, okay? If you want to see, remember what I said, don't be afraid, dial down on 1 minute. What does it look like on a 1 minute? You're going to see the waves. You're going to see the moves. So just dial it down to 1 minute for a little bit. You don't have to stay there. We're not trading the 1 minute. We're not scalping. That was last night, and that's what I forgot to mention on the rest of that trade going over ES I took last night. That was a scalp trade originally to get in. I wasn't planning on being in it most of the night, and of course had no idea it was going to take off and go like it did. So that's why that trail was tight on there, okay? So again, draw your retracement line. It was drawn from this point A to point B, extends past. It's bouncing on it, didn't break it. So that's not good for my position, right? It pulled back to it, but didn't break it, bounced right off it. So it's going to stop me out. I've got no hope that I'm going to stay in this. It's going to stop me out, and I'm going to be done for the day. Okay? So once it takes me out, because I'd be very surprised if it doesn't. So once it takes me out, what am I looking at? Does it pull back past this level? This is that high to break. Okay. Does it go all the way up here, turn, or does it go through? Again, does it go up here to test this previous high over here? And then does it turn there and then go to make a lower low? Is that what happens? If that's what happens, then what am I going to be telling myself? Yep, should have had my stop there. Pulled it too tight. Okay, that's our live data that we're paying attention to. Okay, because again, historically, trading it after doing the back test, we were okay. We had good days where you just mechanically moved your stop off these target levels. This thing profited well. It did 13, a little over 13K in 5 weeks. And that was recent. Okay, so looking at that going, yeah, it's doing well. Just trading it mechanically and systematically. And then you have to decide, are you going to tweak that a little bit? You know, once we're in profit, if I would have put my stop here, it would just be at level 1. Okay, again, keeping it above this high level, this plateau. There we go, we're out. And that's what I got to pay attention to now. Does it go back all the way and stop out here? Or does it just test this high and then turn and go back down? If it does, then yes, I pulled my stop a little too tight. I was paying attention, but you look at it going, okay, we got stopped out here. All it did was, this is after the fact, all it does is go up here and hit here and go back down. Well, then you look at that and say, okay, well, I know mechanically this works, but could we have left our stop out here and stayed in? But again, mechanical test, moving our stop, this is what it was tested on and profited well. So I'm out. So technically I'm done for the day. And we're at what? Not even at 11. So this has been a good day. This has been the best day of the week because we got in, what time was that? So got in there at 10:21. So sat around for about 20 minutes and then was able to get in. Sat around for 20 minutes, was able to get in. And then here we are at 10:52. So 30 minutes. So I was only in this trade for 30 minutes. So to me, this is a great day because one, not really just for profit. It has been the best day of the week for profit. But the reason why I'm saying it's a great day, because I would love if every day this week we came in and we were out of the trades, out of a profitable trade within the first half hour or hour, total hour, 10 to 11. That'd be great. If we just knew we could come in every day, 10 o'clock, start looking, take a trade, and boom, we're out by 11. That would be awesome. So to me, today's a great day. Again, not just based on profit, but based on the time we were in the trade. We got in the trade. We were, what is this? Let me dial out to 3 minute and go back. So looking at our candles, got in the trade at the, it shifted on me. So again, where it says we closed or sold 3, again, it's not at the close of this candle. It's at the start. It's at the close of this candle. This candle came, closed past the low. We sold. So we sold here, okay? 1, 2 candles, and this candle was forming, so not even 3 minutes. So we waited 3 minutes for this candle. I don't remember if it was in the first minute, second minute, whatever, but in the first 2 minutes it closed. So in 5 minutes it went down and closed our partial, okay? In 5 minutes. And then this candle finishes. Look, 3 minutes, 6 minutes. That didn't close. 9 minutes, 12 minutes, 15 minutes, 15 minutes into the trade, okay? So in the first 5 minutes, we closed partial. In the first 15 minutes, it closed past level 2. We'd moved our stop to level 1, okay? So all our contracts were going to close at the same price at that point. And then another 5 minutes went by, it closed past 3. So very quick move on it. And when it closed past 3, we were able to move our stop to 2. And then we've just sat here and it's pulled back. So look at what else we see. What else do we see? There's 2 things to be aware of on this that played out really heavily today. One is the 4-hour zone. That right there, the 4-hour zone here. Okay, always pay attention. Now that I've drawn this upper zone here, I still want to be aware of this one, but it's not my uppermost zone. So I change it to mid-zone color. The reason why is when I'm down on a 3-minute time frame trading, when price pulls back up here, if I don't see the red zone up there, like if I have my chart balloon like this, price comes up to this zone, say next week, I see it's yellow, I know that there's a zone up above it that's going to be red, okay? If it falls down through a zone that's yellow like here, I know that there's a zone down there below this that's green. I know there's another target is what that's telling me. So again, if it drops down as it falls and crosses this yellow zone, I know there's a green zone down there somewhere. Okay, I know there's another target. That's what it's telling me. That's why I changed the color on these. So right now, since we did on the 4-hour again, we did break through back here, these wicks, break through that yellow zone. Now we have an uppermost zone, and that's going to be our red zone. Again, so that's down when I'm on, because I don't trade on the 14-minute or 4-hour time frame. Now I look at it. Every trade day, you should always look out the 4-hour, the 1-hour, and the 15-minute before you dial down to a 3-minute to trade. All right, sorry about that. Dog needed to go out. Make sure mic's still back on. So again, the two things we were looking at is one, that yellow zone. So basically this was our red zone. That's how we started the day. So the 4-hour levels, the 1-hour levels, those you need to look at, those swing highs, swing lows. Because after all, again, if you look at the 4-hour time frame, we did this earlier. After we got in this trade, we're in there looking, and we got in the trade, and let me see. That's a retracement line. We can take it off. But look at where our 4-hour candle did. I mean, we're trading it, but we're trading it down here on the 3. You know, we're in here on the 3. But on the 4-hour, look at what happened. On the 4-hour, that candle pushed and wicked right down to this line that I marked a little bit ago, earlier. We went over this as it was going down. It gives you a more concrete target, a higher time frame target. Where are the market makers trading? They're not on the 3-minute time frames, okay? They're trading off higher time frames. They're trading off of price. What did we just see happen? What did we just witness within this 4 hours? Okay, the 4-hour candle. We see that it's pushed down pushed all the way down to that particular price point where that line is. So that 20,060, that particular price point. Why are we wanting to be aware of that? Well, historically, it's moved to this level. This candle dropped, it pulled back to that price point, okay? And then after it dropped again, it pulled back to test that price point, okay? So let's mark it because it's midway. I always look for a mid-level between my zones. So when I go out to a 4-hour time frame and I draw these, okay? When I draw this off a wick here and draw this off a wick here, and then we're looking for it to bounce back and forth in between before it breaks out. Okay? That may be what it does for weeks. It may bounce back and forth. That's where we've been all week. So whether you guys knew it or not, we had a 4-hour zone here. We had a 4-hour zone here that you look at, you find over the weekend. Look at where we've been all week. This is what we've been trading all week. There's our price. There's our executions on the chart. That's all I've traded in this account. So it has stayed between those two zones. So when it pulls to the bottom, don't be surprised if it bounces. Okay? When it pulls to the top, don't be surprised if it bounces. This pulled midway. So we see, from here, from the high, it pulled about halfway, stalled, pulled back a little bit, and then pushed down. Push down to where? Push down to this level. Don't be surprised if it turns. This 1 4-hour green candle here, look at the wick. The wick went up to test that level. So trading on a 3-minute chart, which we were, you see our trades here, right? We traded that candle, which went from the yellow zone to that 4-hour level. Then it pulled back and went up. We weren't trading during this, okay? Then after hitting the mid-level, it pulled back down. This we were trading as well. Notice, what did we do on this candle? If you look at these, right? Look at this, what we did. We bought 3. That was this 4-hour time frame was our trade day. Okay, so we bought 3, and then we closed out 2, and then closed out 1. It's either end of day, 4 o'clock, or you get closed out, stopped out. Okay, over here we actually took a couple trades. All right, so but it's during that 4-hour candle. But it's no surprise that it was down near a zone and it went up. Okay, we had to push down. We actually had to push back up off that zone. Again, so it goes to the top zone. Don't be surprised if it stops and turns. It did, so it's not a surprise. We're not trading during that, though. That's not one of our trades. This candle was when we were trading. So again, you wouldn't be surprised that it bounced off that level. And again, that's what we're doing today. Today, here's our trade candle, the one that we're in. And it just popped to the 4-hour level. So definitely something, guys, to pay attention to. John, I'm trying to read what you got there here. No, since we just started this and you're talking about leaving all 3 on. Yeah, instead of closing partial. So we can go look at that real quick because that's pretty easy to do. And we definitely, right now, we're hitting that high to break on our 3 minutes. So again, you can always dial down to 1 minute and look at the better, a little easier to move. So we're breaking that. So as of right now, it's pulling back up to the box, back up to the breakout box here from the first half hour. So if it gets up to that box, I would look to short it if it breaks out through the bottom again. I'm trying to fix something on this other charting over here. And the trade's out on the other charting as well. So it just is at 3K. So a little disappointing because I forgot to, because again, that's 4 times. So it's still a good trade. I just didn't put it on at the same time as this one. And I'll have to fix that later. On the other chart, I've got the indicator not working. Oh, John, I'm big on closing partial. Because of that, I've been in too many trades where now sometimes I don't. Sometimes I don't. Like last night, that trade I took on S&P, I did not close any. I put 30 on, and it was in a micro account, 30 contracts, and closed out, just trailed my stop on that one. So very good trade, but I didn't know it was going to break and run like it did. It just happened to run for me. So I was glad I placed the trade. At that point, you're like, man, I'm glad I didn't miss it. But yeah, you can't take every trade you see, because you can't stare at the charts 24 hours a day. And let's see, we can put that on the chart here. So see where off the power trade indicator, we got a sell. That's what I was trying to tell you guys earlier. I know I mentioned that a lot of times getting that, we're getting the same area signals. Not always. Sometimes we're getting them early. So as I looked, and it was on the chart yesterday or the day before, but the power trade indicator actually gave an entry up in here to short, as it was already pulling down. But like on this red candle here, see how it pushed down basically past this turning point here? Then you could trade that. However, this trading strategy is based on the first half hour, so you wouldn't take that trade anyway. So it signaled out, and basically you're going to hold. You're going to hold. So Crypto Life, this is just something I don't know. I don't trade this every morning. So here's what I do. Someone had sent me a message last week and asked about it, said they were having, they were doing okay, I think, with it, is what it was, but just taking a lot of losses on it. And of course, my first go-to is, well, why don't you close part of your profit out when you're in profit? And so I was like, well, let me look at it. So I looked at it Saturday, went through and back tested. I just first of all, I went back. Let me shut this off. First of all, I just scrunched in the charts, okay, and went back over and just did a rough, quick, test. I mean, this is what I was doing on Saturday, just pulling back. Looking at it and going, okay, let's zoom in now. And this is what I was looking at. Boom, there you go. So again, I have the indicator on the chart, which this isn't mine. This is Lux Algo's, one of theirs. Orb and Targets, I think that's the full name of it. Yeah, it's Orb with opening range with breakouts and targets is the name of it. So they've got it out there free to use. It does have the source code, so you can tweak it, make a little changes. So this is how I back tested it. I put it on the chart, noticed it gave a little buy and sell signal. I was like, well, that's great. I can just quickly, how quick can I analyze this, So that's what I always look for. If someone gives me a strategy to look over, I'm always willing to look something over for anybody. Because there may be validation for that. There may be a reason where I see, or someone tells me, like in this strategy, someone says, hey, I work. Hey, Butch, I work. Is there something I could do that I don't have to stare at the charts. I might not get a ton of signals. And to me, I'd say this is something that we know here. We're waiting the first half hour. So at 10 o'clock, you go on a coffee break. You know, if you got a job, you work 10 o'clock, can you at 10 o'clock every day run to the bathroom or go on a coffee break? If you can, then at 10 o'clock, you're going to set an alert line at the high, alert line at the low, and you're going to go back to work and wait for one of those alarms to go off. When that alarm goes off, then you go back on another coffee break or whatever. Or if you can open your phone at work, if you're allowed to open your phone, as long as you're only on there a minute or two, well, then when you get that alert, you open your phone and see that one of them's triggered. Take the trade, put your stop loss in the middle. You're done. Close your phone. You don't need to know anything else. Oh, you'd have to set an alarm line too. Sorry. So you would place the trade long, put your stop down here in the mid zone, right? And then, let's see, let me put this back on. So again, you'd place the alarms, you'd come in back in, place the trade. This one's like right after you set it. Place the trade, put your stop in the midway, and you would want to put an alarm here on profit target 1. So you know while you're working, if your phone goes off and it's going to tell you that your order's been canceled, your order's been hit, then you know you're stopped out. Or you're going to get the alert and you're going to look at your phone, it's going to say your alarm line was hit. And what are you going to do? You're going to just log in the phone real quick and move your stop to break even. So that's what I was looking at. Is this a valid trading strategy? Also, is it something that when someone works all day, they could actually trade this? Okay? Without getting in trouble with their boss. So, but back testing's easy. I sit there and again, I was looking at two things. That's why I drew this vertical line. There's 3 vertical lines. One here at 9:45. Is it valid to trade and wait the first 15 minutes or not? Or do you need to wait half an hour? My back testing showed that the first 15 minutes, you don't always get this. You'd get a break past it between 9:45 and 10 only to reverse. So I chose to keep it out 10. My second line is noon. Okay? And then my fourth line is 4 p.m. because a lot of people are trading broker or prop accounts. So you'd close out at 4. Just close out at 4, be done. Mechanically close, never let the broker software close you out because they monitor that. They don't, particularly their software does. So their software monitors if you close your trades out or not, or if you let their software close it out. What does that tell the broker? Well, that tells the broker you're placing trades and you could really care less where it is at the end of the day. You're just going to let their software close it out, meaning you might not even be monitoring your trades. It's not a good habit. It's not a habit that a good trader or a great trader has. They're going to close their own trades. So be that trader. Close your own trades. I've always stressed that. So back testing, we could see that here, the first day we had a buy, and before noon, it hit profit target 1. We would have closed out 2 and moved our stop. So if you're looking at testing this as a whole also, is should we leave it all on? It's just a lot of times it would hit PT1 and you would move your stop to break even and you're going to get stopped out at break even if you leave them all on. Okay. Now this, again, there's noon. We don't have to trade between noon and 4 because we already profited over here. But you can quickly scan through with something like this and look, here was a buy. Okay. So the buy came up, you would have bought, had your stop loss halfway or midway, depends on you. I just noticed over testing, a lot of times you would get in, it would come back midway and then go, then skyrocket. And you would take a loss and have to get back in, okay? So halfway, stopped out, and then sell signal that does go to profit target 1. As you're looking back through this, that's what I'm looking at. Here's a day where Nasdaq actually bought, went to profit level 1, closed above profit level 2, so you'd move your stop to 1 to 1, and at 4 o'clock you're closing out up here near profit target 3. Here's one where you have a buy and then you're stopped out. Second one, you're having a buy and boom, before 4 o'clock, it goes up to profit level 3. So again, back testing this is easy. Just scroll over. There's a sell. It does hit your stop loss. Now, I think on this day we weren't. We were almost ticked out on this because I went through on a replay. I don't think it triggered the order, but even if it did, then you're getting in when a candle closes again, and it did go to profit target 2. So we're looking at where does it end up going? Here, if you took this as a buy, then you got stopped out. You would have had to rebuy in on this. So that was a couple losses on that day. A buy, profit target 1 was hit before noon, and then ultimately 4 o'clock you're closing out the whole trade here, your runner, unless you're stopped out. So it's real easy to go back and back test that. But I think you also ask about, so no, I don't trade this every morning is the answer to that. So after back testing over the weekend, I thought, well, this will be fun. Let's just go ahead and do it this week for the lives in the morning and just see how it goes. So I knew the back test data was good. I also went through, just like I did those charts just there after I looked and validated, and I was like, well, this looks pretty decent. Let's go ahead, not putting on 3 contracts. And if it gets to profit level 1, move our stop to break even. And then, of course, if it hits 2, we'd move our stop. Because if we keep them all on and it hits profit target 1 and we don't close, we just move to break even, a lot of times you're stopped out. And then and that's okay. You're stopped out at break even, but that would be a 0 day. No profit, no loss. And if I'm sitting here, for a few hours a day, I want to make some money. I'm not sitting here for my health. So that being said, that's why I close partial, is to make sure that I profit some. Okay. So that is, we've traded it every morning this week. So I did put those in, there's a playlist out there. Let me see. So if you go out on the YouTube, well, you guys are already on the YouTube, aren't you? If you go out on the YouTube, if you click under playlist, I'll put a link in here. Let's see, videos. So this, if you guys hit that link, let me pin it to the top. I can't see because my mic stands in the way. All right, so I pinned that link to the top. That link will take you out to they're all just the ORB strategy. And it's this week is what it's got in there. I hope it's got them all in there. No, sorry guys. That link I just posted is to the testing, where I tested Nasdaq, S&P, and then it's got day 4 in there for the lives. So I do have to go put them in. So for the lives, I don't have all the ORB session days in there. Let's see, day 4, day 3. I'm going to go put those in now. And then we're, of course, at day 5. All right, so I just put those in the playlist. So if you go out to that link now, you'll see several different videos in there. Let me pull up the list. So one is just, I think that's the setup video. Then we have the Nasdaq test. And then you'll get into day 1, 2, 3, and 4. So if it says day 1, day 2, day 3, day 4 in front of it, okay, these right here. So again, the ones that say day 1, day 2, day 3, and day 4. And then today's, not the blue here, this day 4 here. I need to change the title of that. And then you'll see today's day 5. Those that say day 1 through 5, those are this week's trades that were done here in this. The ones that are in blue, those are where I actually did slideshows. So this, I need to change this one. It needs to not say day 4. I won't do it while we're sitting here, but that's the ORB strategy on there. And guys, I did go back and read. Someone asked me about the one that was trading 0 to 90 in a year, 0 to 90K. I went back through and calculated it. It's actually like 94K. So it's not quite 100, but I went through and calculated that. Now I'm not going to play the videos. Not long. It's 11 minutes. But that's looking for one trade a day, making $100 a trade. And then the next 3 months, you're looking for 2 trades a day. The next 3 months, you're doubling contract size. And then the last 3 months of the year, you're doubling contract size again. So that is a good video to watch because we're not looking at making a killing to start. You're looking at making a modest trading living, building your habits, building your consistency, and then from there, increasing your contract size will increase your profit. So it's all about getting consistent, though, to start. If you don't build up those good habits and that consistency, then you're going to just lose it. You got to build up good consistency and great habits in trading. One of them for me, again, is first off is going, again, out to the 4-hour time frame. Look and see where we're at. Let's look at the other 3. I haven't looked at those 3. So here's where we are at on those. Let's see, I got to reset the chart. So this is something I've been doing every day, right? We look out at all 4. And this is something that also is a part of the test on that back data. Okay. So as we're looking again on the spreadsheet, that's over here. So as we're looking again on the spreadsheet, that's what we're doing each day. So we're not trading all 4, but we're looking at the data. So right now, S&P has been the best. So this is the data April 14th to yesterday, and today's the 9th. So I'll be updating this at 4 o'clock. So that's how they've hit. You'll see that April 14th, Nasdaq only, it did not close past level 2. So I don't know if it got quite to level 2 or not. That's not what I'm looking for. When it hits PT1, we move our stop to break even. So I know we took 1 trade in the day, we profited, we closed partial at PT1, and we moved our stop to break even, and then we got stopped out. So that's a good day. I'd rather see all days say 1 to 1, 1 to 1, 1 to 1. If that's the case, and I saw all days say 1 to 1, well, then I'd just close 3 out at PT1 and be done. Okay? So again, we're looking for more profit on the runners. So sorting these through, as you sort Nasdaq, I'll just do the 2, but sort Nasdaq down. Again, we look at level 2 and beyond. So we had, since we're at row 11 or 12, it's 11 days. 11 days where it hit PT2 or better. The PT2s, again, means we'd moved our stop to 1 to 1. So on these days right here, it would just been best to just, boom, close it all off. Just close it all, not go for more. But since we see on other days it goes to level 3, 4, and 5, that's why we leave the runner on right there, because that's more profit. Okay, the runners are our bonus trades for the month. Okay, that's how Nasdaq did. So we had 5 days that were 3 and better, and only 2 are dark green. Dark green's level 4 and 5 and beyond. So only 2 dark green. So sorting S&P, we look and see how they differ. Well, right off the bat, I see 4 that are dark green. That's why I went through and decided to recolor these, because I could quickly look and say, okay, well, right off the bat, S&P has more days that are dark green. So right now, looking at just the 2, I'd say S&P would have been better to trade, because also look at all the ones. Okay, 3 out of 5 of those were ones. One of them we had to place the second trade, which means the first one was either profitable, only hit 1-to-1, it pulled back and we got back in, or it could have been a loss. Okay, I wasn't tracking all those or marking all those. This one we had to place the third trade to in order to get profitable, but it was not traded during the redemption period. This checkbox is if we had to trade between noon and 4. So that's the third piece of data we're looking at. In order to get to these profit levels, did we have to place a trade during the redemption period? This day we did, which means one of the trades was before noon, so that would have been a loss. Because remember, we're only trading the redemption period here. If that box is checked, meaning you're trading noon to 4, we're only checking it if we have to take a trade, if we had no winners in the morning. So since this is checked, yes, I had to trade the redemption period. We only trade it if we have had no winning trades in the morning. Well, we had 2 trades in the day. What does it tell me? Well, one of the trades was during noon to 4. That's telling me the other trade was a loss. So the first trade was a loss, but the second trade, and the loss was 1-to-1, right? But the second trade went and closed out partial at 1-to-1 and went to level 4. So winning day on that, okay? Without typing out all the notes in the data and everything. And then we look back to see that, again, it was down here. We're on row 13, so 12 trading days where it was profit target 2 and beyond. So that's how we're, scoring the data. Let me reset this back on the trade. And again, that'll be marked this afternoon. So sometime this afternoon. It might not be till tonight, guys. Later. We've got stuff to do this afternoon. So I don't think it'll be this afternoon, but sometime tonight it'll be, the quad chart will be posted. This view with the just like I do in the Discord, or have been doing in that ORB section. So again, it'll be posted out in the Discord where you'll see the quad view chart, so you can see what levels they hit. We can see by this one the S&P went up. Again, it closed above level 4. And so I got to take the screenshot at end today, but it closed above level 4 on S&P. You go over here to Dow. Dow closed above level 5, which means our stop would have been level 4. We would have got stopped out level 4. This one we would have got stopped out level 3. And we look at Russell, it actually closed above level 4 as well. Nasdaq did the worst out of them. It only closed, it did not close above level 3, or did it? No, it didn't close above level 3. That's the day I move my stop more aggressive. But that'll be posted, the Nasdaq chart up close. And then, of course, the day's trades, that's just for that one day. And then this right here, which shows you which ones hit what levels. So that'll be posted. So that's what we're looking at, testing the data. So no, I don't trade it every day. I know there are people that do. So that's why I wanted to cover it. The next 3 weeks, we're going to have night sessions instead of day sessions. So I've got an event that starts on Monday that is to do in the morning. Sorry. So I won't be doing the mornings for the next 3 weeks. It'll be evenings that we'll be trading live. And that'll be for 3 weeks, and then we'll be back on the mornings again. So here's something I'm going to do. And I think because I know some of you guys might be out there trading this. In the mornings, typically what I do is, not typically, but every day what I do is, of course, I go out to the 4 hour time frame in the morning, go out to 4 hour time frame, 1 hour time frame, dial down, look at where my charts are. So every day, every Saturday or Sunday or Friday night, you should go out to the 4 hour time frame whenever, Friday night to Sunday, go out to the 4 hour time frame and mark your zones, your highs and lows off the 4-hour time frame to be aware of where those levels are. Okay, you'll see that on S&P, I have one down here that it didn't even go to touch. Where Nasdaq, we drew this one and it went down and touched it and turned like right on it on the Nasdaq. So always go out to the higher time frame. And then what I do is in the morning, I'm typically looking at gold, always gold and Bitcoin. So in the morning, whenever I get here, and normally for me, it's going to be around the 8 to 8:30 now. It adjusted with my kids' schedules and everything else. So that's what it's been while they're in school. Now they're getting ready to, they've got 1 week left in school. So after that, when I come back to mornings after the 3 weeks, I might actually get in earlier than that. So, but typically for me, it's 8 to 8:30. I'm in starting to look at charting, look at the 4-hour time frames, freshen my mind with what's going on. Okay. Remember where we're at. Okay. So again, we have a zone all week this week. It's been sideways. So, I like the trade executions on there because we know what day we traded and or what 4-hour candle we traded in. It was this one. It was this one, this one, this one, and here's today. So you can quickly see that. So you can also see where it was in the chart. Okay. Where we were here in the chart, this 4-hour candle, and it wicked down some, but basically was bouncing off that level. This was a definite bounce. Day 2 here, Tuesday, definite. That 4-hour candle pushed off that zone, pushed off the low over here of these candles, the wicks. Okay. Same with here. Wednesday, we actually traded it down to that zone. This one, we traded up off of that 4-hour level back to the yellow zone. Today, it did not surprise me that it went down. Here's where we were at this morning. And when we started this morning, that's what I said. Remember, I said my one caution, I said we're looking at the high, we're looking at the low. I said my one caution is that I have a red zone. Because remember, this one was colored red. It's what I put on at the beginning of the week. So going back to the 4-hour, okay? Here's Monday during the U.S. session. So again, Friday, Saturday, Sunday, you're looking and marking these levels up, okay? So marking these levels up Saturday, Sunday, Monday, we had the low here, this zone. We had the high zone here. And we looked to trade in between that until it breaks out one way or another. And that's what we've been trading in. So going back to the 3-minute, setting up for our trade day. Again, if you're in here before you sit down and trade, no matter, I don't care if it's a 1-minute chart, 3, 5, 10, 15, you should be going out to at least the 4-hour and 1-hour time frames and looking at those swings. Start at the 4-hour. Those are strong price levels, strong zones. So again, I mentioned that this morning. My one caution, if it broke through the top, was going to be that it was trying to break out of this 4-hour high. And that was my one caution. And it didn't. Instead, as it pushed down here, we had what? We had a double top there, right at a 4-hour level. Is that not a strong indication to possibly go short? It is. When do you go short? When do you know? When do you say, okay, I'm going to call it, okay, hit here, pulled back, hit here. When do you call that double top? Well, once it starts pulling down, we call it a double top. Well, when do you take the trade? Well, if you look, we have a high or low here. We have a high here, low here. Higher high, matching low, lower high, lower low, big pullback, but this high is technically lower because of the wick, but really that double top. So we took the break. This candle closed past that low. That's when we took it. and that's the trade we were in. So great trade overall, but you should definitely be aware of the levels. And that's why I went back out to the 4 hour, because of where we were here on this red zone. Okay. When we were here this morning, I said, that's my caution. If it breaks through the top, it's trying to break out of a 4 hour zone. May not go higher, for long term. So let's see what we have. And that's where we dialed down to the 4 hour, and we had the wicks up above. I didn't have this zone up here. So we had the wicks up above, and then of course then you go to a 1 hour, because we're trying to find a decent, I don't like big long like that. I don't like huge levels, because I know it's going to pull up in there somewhere and turn, right? So let's see, put that back on here. So we had to dial it down to a 1 hour, and there you have a little wick. You can also, if you like a bigger zone than that, which I tend to, I would go down to a 15-minute and then see if I could make it bigger, but I don't think we can. So ultimately, you have to be aware, because if it would have broke through the top, what would I say? It may only get to that new upper zone. Well, profit target 1's before that, so that's great. If we would have got in long, that would have been great for our trade, knowing that this zone was not down here in the way of PT1. Because if that would have been the case, you just got to be cautious, because it may not even get to PT1. So if you got any questions on that, let me know. But let's look at all four. So we already know what Nasdaq's done. So Nasdaq went and closed past level 3. So we moved our stop to level 2 and got stopped out on the trade. Got stopped out on this green candle that pulled up, or that wick there, one of the two. So a decent trade on it overall, closing past level 3. So that's what's going to be marked on that spreadsheet. It's going to be marked PT3 and then one trade. Okay, so I know when I see that, any hit in PT3 and then only in one trade is a great trade. We know that's a great trading day. Okay, so we look at S&P. It also closed past level 3. So you would have moved your stop to level 2, and that's where your runner would have been closed out. And then when it gets to Dow, it only closed past level 2. So on Dow, when it closed past level 2, you would have moved your stop to where? To level 1. You'd have been stopped out on your runner. So on this day, your runner gets closed out at the same place where you actually closed partial. So again, Dow is S&P's been the runner, the front runner this week, as well as testing the back data. S&P has done better than Nasdaq as far as hitting extended profit. Sorry guys, I got to remember to drink something or my throat gets dry. So far again, S&P has been the best on all. And then we get to Russell, which we know typically it's done the worst. So Russell's the last one that I would look to trade this strategy off of back testing and off of what we've seen this week as well. It did close past level 2 today, and you would have been stopped out in your runner at the same place you closed partial. So still a decent day on Russell and Dow. They both only closed past level 2. So your runner stopped out the same place as partial. And Dow or Nasdaq and S&P both closed past level 3. So your stop would have been moved to level 2. So on both of them, you squeaked out an extra level of profit by leaving the runner on today. So to me, that's a great day if we can squeak out some extra profit on there. I'm just looking back over if you guys got any more questions. I don't know why your guys' questions aren't popping up in the screen. Yeah, so John, back to your question. I did not run the test back on that to see about closing all, and that's what I was trying to get at. And I hope I covered that. If you got any questions on it, let me know. But by looking at that spreadsheet, I didn't run a replay test. That's I guess what I'm saying. So I didn't go back and run a replay test on it. Again, I can do it by just pulling this data, just going back and looking at doing the test. You can always go back and run a replay test on this if you want. But for me, this is the big one right here. Again, I don't want to see it just hit PT1. Because on these down here where it just hit PT1, that means that we closed partial, moved our stop to break even, and got closed out with 0 on that last contract. Okay? But once I see these level 2s, that means that when it hit level 2, close pass, we moved our stop to level 1. So this right here, all these trades right here, what is there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So as you look at these trades, 11 days right here, because again, when it closes past PT level 2, we move our stop to 1, which is where we close partial. When it moves PT1, we only go to break even. So if you're thinking about, well, what if we just move our stop and leave them all on, like your question is, then on these 11 days, yes, it would have been better just to close them all at PT level 1. Because these ones that say PT level 2, that would match that. If we just close them all out when it hit PT level 1, because it closed past PT level 2, you'd move your stop on the runner. So if it says PT level 2, that means that you could have just closed them all out. You got the same amount by leaving them all on and just moving your stop. So PT level 2, again, you look at those and say, we could have just closed it all out. If that's all I did. If I saw every single one of these days had PT level 2 or 1, then I'd say, okay, we just need to start closing it all out when it hits PT level 1. Because these here, when it hit PT level 1, those are less profit than if we just closed it all out, because we're only closing 2 and our runners at break even. So we would have profited more on these 6 days by closing out all at PT level 2 or 1 when it was hit. So anything that says PT level 2 and below, if that's all we got, if every single day it was either PT level 2 or 1 or 2 or 1 or 2 or 1, every day, all year long, well, then we just need to close out 3 at PT level 1. That's it. Close them all out. But because we're here, we're going to get more profit on the runner. So if you want to look at leaving them all on and moving your stop, and not closing partial at PT level 1, here's the data on that without going back and looking at the charts. If we look at, if it hits PT level 1, just hits, not closes past PT level 1, we move our stop to break even to cover our position. On these days right here, PT level 1, we did nothing. Okay, no positive trade, no negative trade. because it hit PT level 1. We moved our stop to break even. No loss, no gain. Okay? No loss, no gain. Hits PT level 2. What do we do? PT level 2, on these days, we moved our stop to PT level 1. So anywhere it says 2, you're getting that around that 1-to-1 level. Okay? And then on the days where it hits PT level 3, well then, of course, we would have got 2 times, because we would have moved our stop at PT level 2 as we're trailing it. So we would have got 2 times, level 2 versus our stop. And level 4, we got it 3 times. So you could quickly go back and look, and here would be PT level 1 is nothing. PT level 2 would be 1-to-1 risk. PT level 3 would be 2-to-1 you're getting. PT level 4 would be 3-to-1 because our stops moved to level 3. And of course, PT level 5 would be a 4-to-1. And it's not true 1-to-1, keep in mind. It depends on how long that candle is that closes past the entry. So, but that's how you would want to look back. And you would look back and say, okay, these all here are 3-to-1. And for me, I'm looking at, S&P and Nasdaq and going and looking at that data and again going, well, we already know that there were more times that S&P hit level 4 and 3 and 4 than Nasdaq did. We only have 5 days in here. Okay, level 6, 5 days that Nasdaq hit PT level 3 and beyond. So that's the data we're looking, but that's how you kind of look back over. So you could go back and do the replay, but we actually had 7 days here instead of 5 where S&P hit level 3 and beyond. So far, again, that's the winner. Did that explain it? Oh, that one? No, I get more profit on that one than this. I trust the power trade signals over this. But what I'm going to probably do, and in the mornings, I'm typically just trading that power trade signal, that one, in the morning on my charts. And then what I said I'd do as we go forward doing daily lives after this 3 weeks is, since we're already in here trading during the start of the U.S. session, what I'm more than likely going to do is come in and we'll be trading the power trade signals. And then around 10 o'clock, before 10 o'clock, I'll add this indicator back on. So again, we'll be trading the power trade signals in the morning, and then we can we'll take this off. And then around just before 10 o'clock, we'll pop this on the chart. But the difference is we'll have the power trade signals on there as well. Okay? And we'll pop this back on the chart just to see how because I know some people are trading it. So they can see how that actually does during the morning. So good trade on it. It's lingered. And notice it pulled all the way back to level 1. So again, I was stopped at 2. And remember I talked about, well, what if we just had our stop above this flat area? Because as I dropped to the 1 minute and we had the flat area there, well, we got stopped down on that too. So glad I did stick to the rules and move to level 2. And again, that's how we were supposed to test it this week, is just stick to, make it mechanical, make them systematic, mechanical, and move our stop accordingly. And John, along with that power trade indicator, I'm big on drawing my retracement lines, my pullback lines. So as something moves down, as it's pulling back, I end up with a ton of lines on my chart because I'm looking for it to break these retracement lines. Okay, and that's what I'm always doing. So at the end of the day, I might have a ton of lines. Again, looking for, as it moves up, drawing a retracement line, looking for a break of that retracement line. Are we going to see continuation to the downside? So we had bearish structure up here. It was bouncing off a 4-hour zone top. It broke out through the bottom. We're in short. Just because it has a deep pullback does not mean it's losing its bearish momentum. okay, you're going to have pullbacks. You're going to have profit taking. So how deep does it go? We don't know when those moves are over. So you draw the retracement line. It helps you see when that move's possibly over. It broke through the retracement line, came up, tested the back of the retracement line, and had a further push down off the retracement line. So far, we're still seeing strong bearish pressure. Don't know if that's going to end up following through the rest of the day, but that's how I'm typically trade. I'm still drawing trend lines, or in this case, most of the time it's just retracement lines. And then I have the power trade indicator that that we're taking the trade and riding. So I think it's this one. So again, going back to the Discord in there on that trade. Where's that at? I put it in here. The trades last night are at, and I did put my, this was that Canadian dollar, or the British pound trade. The 10 runners on it. So in Forex, I'm typically trading with 40 lots. I had to check because I got a Canadian trade right now. It's only up like 3,700. I'll post it in a little bit. So I still have 440 on it. But this was a trade last night on S&P, and you'll see all the buy signals in there. So this is one I took last night off of the buy signal off the power trade indicator. So we're seeing that bottom row stay green. It's nothing but green. I held the trade. I had this really set up aggressively as I was looking for scalp trading last night. And so I actually had it, what was it on? At 5, 10, and 15. I had it tight on the time frames because I was looking to get in and just scalp trade. I wasn't looking to hold long term. However, it took off from my entry, and then it pulled back, and I thought, okay, it's going to come back, and it didn't, and it kept popping buys on there, and I'm like, I'm just going to hold it all. So I held all 30 contracts, and then eventually, when it got here, I closed out 25. You know, I'm no dummy, and I know it's not going to last forever. Still seeing everything green down here on the indicator, but it was so steep, so aggressive, such a steep, aggressive move. I was like, I just need to close out 25 and be done. So because that was at almost 11 o'clock, right? And then it did pull back right here. So it pulled back. Now I did put the trail on there. That trail is for moving your stop loss along the way. And I kept the trail tight since it was such a steep move. I just had it shut off on that other picture. So I was looking, this picture here, I didn't have the trailing stop on. I'm just trailing stop off highs and lows, off movement. So my stop was down here, but on that steep move up, I just kept bumping my stop up. So when it came up, I was actually looking for a reason to possibly get out, or I closed out 25, close out 25, and then where do we push our stop? On the runners. So I closed out 25, and I'm like, where am I going to push my stop? I was at 56.89. So if you put it up here, so again, that was 56.89 on the stop. I turned on the trail. The trail's here, and I moved my stop to keep it underneath the trail indicator. So I did move my stop from whatever that was. Where was it? $56.89, $56.91. I didn't squeak it up much. So pretty much I was up near where the trail needed to be, just manually doing it. And then, of course, then it pulled back and took it out on that pullback. So that's kind of how that works. Did we look at all four? Yeah, we looked at all four. So again today, S&P and Nasdaq, they did about similar moves, similar profit targets. Definitely, we closed past level 3 on both, and then the other two just closed past level 2. So good day across the board on all four. But again, if you're talking about Dow and Russell, since they just closed past level 2, our stops would have been moved to level 1. So we still got one level of profit on the runner, whereas these over here, we actually got 2 levels of profit on the runner. So that's why I like to leave runners, because typically they'll bank you more. And a lot of times, if they actually break and run like last night on S&P, then those runners will cover losses and also get you a bonus for the week. So far good on the week. Where are we at over here? So I ended up $3K on the other account, the 4 times account. So again, I was trading that on the side. That's why I didn't go over it this week. I was like, well, I'll do 4 times, because again, on the slide shows, we're trading 3 contracts, and we've been trading 3 contracts all week in here to see what we bank at just a modest 3 contracts, closing to it at PT1 and moving our stop, keeping it one level back, trailing it one level back. Just that systematic mechanic. Someone's at work, they can't watch the charts, but they can sneak out or open their phone, and they can put alarms on the chart. So again, you enter the trade when you get an alert that it's closed past the low. You enter short. When you enter short, you put your stop loss at the halfway. You put an alarm on PT level 1, and then you go back to work. And then when you get an alert on your phone, it's either going to be you're stopped out or it hit your alert line here on PT level 1 is hit. So when you get that alert, if that's what you get, then you need to open your phone up and move your stop to break even, because you've also put pending orders, right? So we got in short, stop back here. We put a pending order here to close out 2. So when that alert's hit, you know that, or orders hit, you know that you've closed out 2 automatically. You need to adjust your stop to break even, okay? And then you come, while your chart's open, you move your stop down to break even. You also set an alert line here on level 2, because it would be here. And then the next alert you're going to get on your phone is either this alarm line going off or you're stopped out at break even. If you're stopped out break even, you're just done. You could be done for the day. You don't need to do anything. However, if this alarm line is triggered, then you open up your phone and move your stop to level 1. Again, this alarm line's triggered. You open up your phone and move your stop. So you can do this strategy while you're at work. You just have to be real systematic about it. Real mechanical is fine. And just do exactly that. Get in the trade, put your stop loss on, and put your, in this case, buy limit to close 2, and walk away. You don't have to sit and stare at the charts, but you can do this to walk away. So that's how it was tested. So again, not bad on the week. We got 728 on the week on this, just trading 3 contracts. So I feel this was a good test on the week. It wasn't the best. We got to add that. Let's not forget the trade. I didn't move my stop. These 64. So we have to add the 64 back in. So it's actually 846 on the week. I'd have rather seen us hit 1K for the week. We didn't. So, but overall, a good trade week. There's all the trades for the week on this one. And on the 4 times account, they're all just 4 times this, except for today, because I forgot to put that first entry on. So again, 846 on the week, which is 211 on the day. So look at 211 on the day. How much do you need to make per day? How much do you make per day as you go out and work? I always go back to what people typically make around here. Coffee shop, people that work in coffee shops are typically only making about $15 an hour. In construction, if you just show up with a tool belt and a hammer, you're getting paid $20 an hour for not hardly knowing anything. You don't even have to know how to swing a hammer. And you're making $20 an hour. So 8-hour day is $160 a day. So that's what I look when I talk to people about trading. How much can I make in trading? Can I make enough in trading to quit my job? That's normally what most people say. They're not saying, well, can I make enough money to pay off my house? Can I make enough money to buy a Lambo? Can I make enough money to buy a boat? Yes, you can make enough money for all that. But where should you start? Let's start just making it a daily wage. Start there first. Get consistent. Get systematic. Get your emotions out of the way. Building and just looking for that daily target. A lot of people are sitting there and they're trying to go for the gusto, and they're trying to make these huge winning trades. They're betting the bank. They're throwing it all in, and then they're blowing prop accounts or blowing personal accounts. 3 or 4 years later, they're still doing it, and of course, they still don't have their boat or their mansion that they were shooting for, and that's why they were trading so large, when in fact they could have been trading the whole 2 or 3 years and just making a daily living. Let's do that first. So that's what I always recommend. And again, in construction, a lot of guys can show up to work, able-bodied show up to work. You're paying them $20 an hour. So 8-hour day is $160. So we did $211 per day this week. So to me, that's a great week. Again, it's not the 5 thou or 10 thou. We're not trading the contract size to achieve that with this strategy. With this strategy, just trading 3 contracts, okay, then that's what we're making. We're making that daily living. Now, in the 4 times account, I got $3K for the week. So again, I missed out on Summit today. There's my entry right here. I'm making sure my pointer's there. Why does it not switch over for you guys? Oh, it's in this line. I was looking for this right here, the execution order. So, again, this morning I showed you guys where I was on the 4 times account, because I didn't tell you this week I was trading that, but on the side, on my other computer monitor, I was actually had another account pulled up that was 4 times that I wanted to trade in that account the 4 times. So because at the end of those slideshows I showed you, we're going to do 3 contracts per trade. That's what I tested on. That's all you need. All you need to test it on is test it. I do 3 contracts. Let's close off 2. For me, it's normally 10. 10 contracts close 8. 10 contracts close 8. And you could go back through back testing on that and see it. In fact, we'll do that here in a second. I'll do it real quick before we leave. But just on like today's. But I already know that if I can put on 3 contracts and close 2 and leave a runner on, I already know that's profitable. So yes, so far, this has tested out to be a profitable system with the way we're doing it. I trust my manual testing way more than anything that a coder can code to back test. Okay? Only because manually I can go back in like the replay and I'm pulling the trigger myself. Okay? If you're using back testing that's coded, you got to hope it's coded correctly. And you have to hope that that coding allows it to take the same exact trades. So if I was going to do that and code it, I would still want to see it on the chart. I would want to see this right here. I would want to see an execution of contracts, an order put on, where I would manually, physically place the trade. I would have to see that. I would have to be able to go back and look. at the previous days and manually see where I would have taken the trade. Okay. So again, I really trust me going through and back testing more than anything else, because I'm watching and executing versus programming it in and hoping that the back test results I get are taking the trade when I would take the trade, closing partial when it's supposed to close partial, moving the stop when it's supposed to move the stop. So what was I getting at? So again, the 4 times account, we were at 728, and then let's do that. So we're at 728 plus the 64. So is that right? 64. I don't know why I keep looking at this. I keep forgetting. Yeah, it was 64. So we had 728 plus 64. That's the 822, okay, for the week. So we're at 822. So multiply that times 4. It's 3,288. So if we go back to our 4 times account, which is here, if you look at the P&L down there at the bottom, and it's shifted. I got to put this stupid trade panel open. There we go. So if you look at the profit and loss down at the bottom, I got $3,055. So I shorted myself $233 by not placing the trade early. So again, here's the difference. When we were at our ORB strategy account, I placed the trade when it closed past. And again, I'm on a 3-minute or a 1 minute, but we put the trade on here when this candle closed past the low, and we pulled partial when we put buy limit order of 2 there. Okay, so that was our profit. When that closed, when we had that, and I'll go back down to a 1 because it's a little better to see a comparison. So again, when price went here, it closed out our buy limit of 2. That was our profit. We moved the stop to break even. At that point, when that happened, that's when I was like, okay, I forgot to go into this account and trade. When it crossed that line, I was like, wait a minute, I forgot to go in the 4 times account and place trade. So I lost out on 233 on this account. So I did quickly place the trade, and then of course closed out here, because when it got to the 4-hour zone, that 4-hour level, then I moved the stop on that one. And I was like, okay, I'm going to close it there instead of just the 1-to-1. Try and make up for that. So I didn't get true results on this one. So still made $3K on the day. So my point is on that is that it's all a matter of, first of all, getting consistent in your trading. Let's build consistency. Let's become mechanical. Let's become robotic. Take our emotions out of trading, because it's way easier said than done. Like I said, when I started, I know 2 tools that I had in my toolbox in trading. Here's a secret. 2 big tools that I had in my trading back when I started was a bottle of Tums and a bottle of aspirin, Tylenol. 2, that's the secret when you start, is always have Tylenol and Tums at your desk. I did, because and that's when I was real money, not demo trading, but when I were real money, because of course I funded with 20K, and that I had to have. Yeah, there were several days I just felt sick to my stomach. I'd see it go up, I'd be up 400 or 500, only to go back down, because I was trading the 15-minute time frame. I wasn't closing partials. I had no idea about. I'm like, I got to figure this out because it's not working. So that's what we figured I needed to do. And that made me more comfortable, because once you can close partials and move your stop to break even or move your stop to halfway point, you can relax. The pressure's off. So great test. Again, we made 211 each day on the main account. That's what it averaged out to. Again, that's more than a lot of people make by going out and working 8 hours a day. And our trade, really, this happened in half an hour. Okay? Half an hour to an hour. On this account, the 3 times account, even just missing out on the 233, I got 3,055. That comes to 611 per day. Okay, so 611 per day. And if we trade 20 days in a month, if we traded all 20 days and did that, that would be 12K. Okay, and just the 211, just that $200 a day times 20 trading days, we know that's 4K. Okay, and that's a decent living for most people. Most people go out and work 8 hours a day, and they're not even getting to 4K a month. So just start wherever you're starting and shoot for that modest daily, let's just make a daily living. If you're shooting for that just $200 per day, our runners will get you more if they keep going, okay? But let's just make that daily living first, that amount you need to live on. What do you need to pay your bills and live on? What do you make at your job per day, or what did you make at your job? I don't know your situation. Everybody's different. You might be retired. The first guy that ever talked to me about trading was retired. And I said, well, how much do you want to make a month? He said, 4K. That's why I use that in example a lot. I'm like, well, that's easy. That's $200 a day. I was like, do you want to make just one trade a day? Or would you rather be okay with placing 2? He's like, I'm okay with sitting around. He's like, I can sit around all day. And he goes, I'm okay with sitting around placing 2 trades. So that was the goal. He only needed 2 trades making $100 to get 200 a day for 4K a month. Now, a lot of people go, well, yeah, but what about if you have a losing day? And here's what I tell them. I say, so what? You could be shooting for 1-to-1 on your strategy. As long as your strategy is profiting more than 50%, if it's 60, 70, 80% win rate, then so what? If you have 5 losing days, if he's shooting for that 4K a month, and you have 5 losing days, but you're profiting more than a 1-to-1 because of runners or whatever, then you're still profitable at the end of the month. If you, instead of profit 4K, you're at 3,500 for the month, so what? If you're shooting for 4K a month and you're at profit at the end of the month, $2,700, so what? Is that still not a good month? Yes, it is. You're still at a winning month. So it's okay to take the losing days, all right? Oh, you can. That's what I did last night, John. Those pictures I showed you on the on that, the trade I took last night on S&P, on that one. I won't go out to that chart. What am I? I'm not hit the wrong thing here. Let me do it manually because it's going to make me. So we did add. I got the wrong one on the chart. I don't have the new version on there. Well, I forget what I named the stupid thing. There it is. All right, it's 20. So that's the trail indicator that you would put on after you take an entry. I don't leave that on my chart, and the trail thing is by no means a reason to take the trade. But what I would normally do is take this and I adjust it and make it tighter on the way down. And that's where you're adjusting this right here, this multiplier. The smaller the number, the tighter it gets. See how it's gotten a little bit tighter? And if you adjust it to like a 1.5 today, That's typically how tight you can keep it, is at a 1.5. So this is nothing more than a stop loss management tool. I asked the person that helped me with the coding on this if he could add that in, because depending on your account plan you have with TradingView, you can only have X amount of indicators on your chart. I can put a ton of indicators on my chart, but not everybody can. It's based on your subscription plan. So that being said, I didn't want people to have an extra indicator on the chart. So it is built into this one now. And again, I adjust the profit or that multiplier down as we have the move. So again, today we have this set on the 15-minute, 60-minute, and 4-hour. What do we look at in the morning? When I come to my computer in the morning, I look at the 4-hour chart, I look at the 1-hour chart, I look at the 15-minute chart, and then I dial down to a 3-minute to trade. Okay? This indicator is looking at the 4-hour chart, the 60-minute chart, the 15-minute chart, and giving us the red and green dots down here. Okay? So if I'm in short on this orb strategy, a breakout short, okay, and we actually had a sell signal. So we had a sell signal. The power trade indicator gave a sell. So again, multiple reasons to take the trade. We're taking it on the breakout. We were testing it without this indicator this week. And then we would hold. We're holding. As long as these all stay red down here, we're going to hold. But we're moving our stop. So moving your stop off this indicator, I always have that magnet on, magnet off. So again, moving your stop marker down, or we'll move it down, getting in the trade, stop would be here. It hits profit level 1, we move our stop to break even. Stop would be down here. It goes and closes past profit level 2, we would move our stop here. Okay? That's trailing the way I set it up trail. It comes down and closes past this profit level, we would move our stop down to this profit level. Okay? So trailing it tighter would be using the trail. Now, what I like to do is use the flat level. So the flat plateau level, as it's pushing here down, then you would keep your stop above this flat, not right at the flat plateau level, but above it. Well, surprise, surprise, it's level 1. Okay? And then you could just trail your stop like that. As it moves down, aggressive, you're pushing your stop. The stop, trail stop indicator flattens out, you're moving your stop. You're keeping it above it, so you would be stopped out right in here somewhere. Well, where was I stopped out? I was stopped out here. Well, I was stopped out here. So you would have made a little more profit on your runner by trailing tight like that with your stop and just using something like this. You can, and this is based off the ATR, this trail. So you could use that, or you could use something like a moving average. Moving averages work as well. So either or. But you would have squeaked out a little more profit on these aggressive moves. So yeah, when it gets aggressive, and that's what I did last night on that trade. I just left them all on, all 30 contracts, and as it moved steeper and steeper and steeper, I just trailed my stop up as it moved. But yeah, you can definitely use something like that, something like a tool. We'll go back to a 3-minute. So good day on today, but good week overall. Again, we were 211 on the day, each day. Not a great start for the week, though, guys. You guys know that. We didn't have the best start on the week. It ended up being good. Ended up being a great week, really, at 211 per day. If I was out and worked right now, 8 hours a day, and that's all I made was $20 an hour, I'd be bringing home $160 a day. Okay, so if this all is all I could do, is this the count size I can only use 3 contracts per day and do this, I would be satisfied doing this every day. And then, is it consistent? Well, we've already seen that. It's already shown that it is pretty consistent. Over the last 5 weeks test before, it made 13K. So today, we didn't even make, or this week, we didn't even make 1. So you would hope that over the next 3 weeks that we're profiting. But you still should be happy with your daily goal, your daily bread, whatever you need to survive. Okay, so going back, I'll do a quick replay on this because it's pretty easy to do. But this would be a replay, okay, on it. As you're going back and testing, doing a replay, just have your indicator on the chart, and we're ticking over 1 candle at a time. So there's our close candle. So for me, typically, I said I'm doing 10 contracts and closing 2. So I would have sold there. I would have pulled my stop here to the halfway. So for me, at 10 contracts, I'm risking 870 on this trade. But I'm doing more contracts than just the 3. And then just tick over your candles. It's easy to do this. Now, the only thing with replay is you can't put pending orders on it. I so wish we could. You could use take profit. I could have pulled the take profit level down, okay, to 1-to-1. But it would have closed out all 3 contracts. Well, that's not what I do in my trading. So this right here is going to skew my numbers a little. And I know that because if I could have put on a pending order here to close 8, a buy limit order to close 8, the 8 would have been closed at this level of profit. But instead, with this replay, you're ticking over candle by candle. I don't have the option to close out partial, okay? I just don't have the option. The only option I would have is to dial it down to a 1-minute time frame. And then maybe during this 3 minutes, the 1-minute candle or the second candle would close around that price and I can close out. So this does skew the data a little bit by me going out and doing this and closing. I'm going to buy 8 back by closing 8. So that's something you have to realize on the replay mode, is that does skew the data a little bit. So at times you might have to get more, so I locked in a little more profit on this. So I know that was not actual profit to move in. And then of course we'd move our stop to 1-to-1 and so we don't lose anything. And then you're just ticking over a candle. So the only thing I'm waiting on now is I'm waiting on a candle to close past level 2. So there's a candle that closed past level 2. We move our stop to level 1. Let's just keep ticking till we close past level 4. There's level 3 we close past, and we're going to move to level 2. So mechanically, systematically, again, I set up an alarm on 3. It closed past 3. We got an alert, open the phone, move the stop. That's all we're going to do. So we have an alarm set on line 4 if it pulls back. And there we got stopped out. I don't know why we got stopped out here. Did I manage my stop correctly? Oh, there's where I got stopped out. So still $1,000 on that trade. Guys, I think I did it on the right day. I'm not sure. But that's how you want to test a replay, is just go back candle by candle. John, if I'm understanding right, I'm not big on closing the whole trade out, ever. I'm always willing to give part of the trade back by closing partials And typically for me, like I would close partial and move my stop to the halfway point, halfway to break even. So yes, I would be willing on the 2 contracts, putting on 10, closing out 8, 2 contracts, I'd be willing to give back a little bit because just how many times I've seen them break and run. So the partials are huge to leave on because, and I don't know if you were in the other day that, and I don't have a good example, not on Nasdaq. Well, we have something right here, but I've seen too many times that you'll see like sideways here. We're in a sideways direction here. Okay, but we're getting nothing but buys off the indicator. Again, it's monitoring higher time frames. 15 minutes, 60, and 40, or 4 hour. We want to trade with those. So we're marking the high low. You're waiting on a break of that. We've had nothing but buys in here. You could have bought any one of these levels. Okay. And this is end of day, 4 o'clock here. So this is 6 o'clock at night. So 6 o'clock at night, buy. Okay. This was Wednesday. So it breaks through the top. So if I'm closing all, if I were to close out all, I only get this. Well, let's say I get in on any one of these buys, sit in the negative for a while, positive, negative, whatever. It breaks through the top, and then let's say we close it all. One of these candles, we close everything because it's hitting here, and it's also hitting the 4 hour. Okay? So it's hitting this previous high right here. It's also hitting the 4 hour, and you just, I don't want to say panic, but you see it get up there and you go, I'm just going to close it all. I'm going to close all 10 contracts. And then you do. And you close all right in there somewhere. Okay? That's still great profit. But you miss out on this, where you could capture more profit. All that. And we already know where else did it go. We've got a red zone up there. What were we trading in this morning? We were trading in the red zone. So you actually miss out on all this extra by doing that. So that's where we would pull our fib tool, which has been modified. I don't know where you'd get in. You can even get in there. But you'd pull your fib tool, and mine's upside down, and have those profit targets laid out for you. So the way we have the fib tool marked is it's actually got 22 levels in there. So that's the thing. Let me pull it. It would be, it's no different. And it looks no different on here. We'd pull it from, not that. Pull it from where your stop is to your entry price. And there's our targets off the fib tool. They're all mapped out. The same thing. So I just know that by leaving runners on, we capture way more profits than closing all. Yeah. It just happens. So I don't need to back test it because I trade it that way every day. So okay, so on using the power trade indicator, I'd say yes, you're going to profit more, way more by leaving all the contracts on and not closing partial. However, you're also going to take trades where it only goes to, like level 1, especially like platinum, where platinum would, as far as what I've traded, I'd seen it go to like the first take profit level, and that was it. So you're stopped out at break even if you're keeping your stop one level back. So anytime, and guys, and it doesn't matter if you're using this ORB strategy indicator, or if you're using, the power trade, you take that sell, in here, and if you're putting on this tool here, and that's something you could always go back and back test. Then again, when it gets to profit level 1, if all you did, you don't close partial, and you move your stop to break even, okay, it gets to profit level 2, and you move your stop to one level back, or you could be trailing tighter off a trailing stop tool. You get stopped out there. So you would have got 1-to-1 today if that's what you did, left the whole thing on, all 3 contracts or all 10 contracts. You get 1-to-1. So what you have to do is look at how many times it gets past level 3. How many times it gets to level 4. Because if we're closing all, and basically right here when it does get there to level, second level of profit, if you closed partial, you'd close partial here like we did, close partial here, stop down on runner. So that's basically the same identical trade. If we managed our stop on all 3, we didn't close partial, our stop would be here, and then again it comes down and closes past 3, we moved our stop here, and then we get stopped down. So you'd be looking for the instruments that go further than this move. And yes, on those, then you could sit there and leave it all on. I will tell you this, the Forex market's completely different. So I would trust that more in the Forex market than I would on futures, especially after the back test. After trading this the way I've been trading for the last, when was it? Year before last? So 2 years, I guess. 2 years trading futures. So I just know that on the indices, you don't get it to where it breaks out and runs a lot. So as you look back, and again, I don't care which one you're looking at, and that's what we pretty much did. That's what I was trying to get across. The point I was trying to get across was that on the spreadsheet that I have out there, the tracking spreadsheet, that's pretty much the data we're looking at. Would it be better to have left full contracts on those? So going back to the spreadsheet, again, would it be better to leave full contracts on? That's what all this is right here. I guess that's what I was trying to get across earlier. That if they say 1-to-1, all those trades are break even. If you, okay, let's say you say, I want to do this strategy, and I don't care what strategy you're using. This could be the same data. This could be the data on a moving average cross strategy. This could be the data on a MACD strategy. Okay? It doesn't matter what the strategy. We're looking at the data. And let's say you adapt this and you say, I want to do this, but I only want to place 3 contracts on, and I'm not going to close partial. Not willing to do that. Don't want to try that. I'm just going to put 3 contracts on, and I'm going to manage my stop. And then you say to yourself, when it hits PT1, hits it, or you could do closes passes, up to you, that you're going to move your stop to break even. Well, then every one of these that say PT1, when you adjust this out, every one that says PT1, you just wipe those trades. Just wipe them off your spreadsheet. Because when it hits PT1, what are we doing? We're moving our stop to break even. So those are 0 days. 0 gain on these days, 0 gain, 0 loss on those days right there. Okay, that say PT1. 0 gain, 0 loss. So just wipe them off your chart. They don't even count anymore. Because on those days, you didn't take a loss, you didn't get a gain. So where you're going to start looking at the data is here. On these days right here that say PT level 2, on all these days, when it closes past PT level 2, you're moving your stop to level 1. Then you would have got around the 1-to-1 level. Okay? So you're looking at those trades going, okay, we would at least got 1-to-1. This is where the comparison would really begin. Would be when it hits level 3, now you're closing off all of it at level 2 because your stop would be to level 2. So again, if it hits PT level 3, you've moved your stop to level 2, all 3 contracts. And what are you getting? 2 to 1. You're getting 2 to 1 on all 3 contracts. If you close partial at level 1, you're getting 1 to 1 on 2 contracts. And you're getting 2 to 1 on the 3rd contract. Okay? So again, if you're closing partial and it closes past 3 on 2 contracts, you only get 1 to 1. On the 3rd contract, you would get 2 to 1. But if you're keeping all 3 on and just moving your stop up, level 3's hit, you move your stop to level 2, you would have got 2 to 1 on all 3 contracts. And again, closing partial would have been 1 to 1 on 2 and 2 to 1 on 1. So you would lock more profit in. So really, and that's what we're looking at. That's why we're looking at this. If you're getting to profit level 3 and above on back testing this, just this, and again, I'm using this as an example because that's what we're trading this week. 3 and above. So it has to hit level 3 and above to say, okay, I would be better off to leave all contracts on. Okay? And again, we're zeroing out the bottom data. So those days right there, 7 days, nothing. Might as well not even have traded for those 7 days. These other, 6 days, we would have closed out all at profit level 1. 1 to 1 on 6 days. And that's okay. 1 to 1, 6 days. Not great, but good. And here we'd say 2 to 1 on all contracts. We hit level 2 to 1. Great. Those are great. And these we hit, higher levels. So that's what you would look at. So yeah, you will, as we look at it, I want to see way more days that are hitting level 3 and 4 to know that, yeah, we would make a lot more money if we just wrote it out 4 or all of it. I tell you what, for you, John, because this will be fun for me. I'll do it Saturday. I'll have time Saturday. Saturday. How many contracts do you want me to use? How many contracts do you trade? This is fun for me, guys. I live for this every day. Have for a long time. How many contracts do you trade? Just, or how many contracts would you want to see me trade? Because what I'm going to do is Saturday, I will go back in replay mode like I did the other day, and on Nasdaq. And if you want me to use Nasdaq or one of the others, let me know. If you'd rather see me use ES, I don't know what you trade. But if you want to let me know real quick before we end, I'll because that's what I'll do. I'll go in over the weekend. Well, let me do 3. I'm going to do 3. I don't know why I ask you that, because now that I think about it, I want to keep the comparison good. So I'll do Saturday. I'll go back in and replay on Nasdaq, and I will do 3 contracts in. I will not close partial. Yeah, I'll use the same, because that's going to keep the data comparable. So I'm sorry I even asked that. I wasn't thinking. So I want to keep it consistent with what we're doing. So Saturday I'll run back through the back test. I'll do 3 contracts on, and I will not close partial. So for me, I got to remember to not close partial, because I just am so used to that. So it may take me, like I might start the back test of the replay, and I might start out, and this has happened before, where I'm like, okay, I got to remember just to move the stop. And then it'll hit like PT1, and then I'll actually close partial, and then I got to restart the replay. So I got to stay focused on that. So I will do that. I'll run back through. We'll do a test on that. This will be good, actually. So we'll do 3 contracts on, and then I'll just move the stop 1 level back. So there will be days where it'll be a break-even trade. That'll be good. Yeah, I think S&P probably would, but I'm going to run it on Nasdaq just to compare apples to apples that way. Because if I do run it on S&P or change contract sites, we're not going to get true apples to apples. So since I've already run the back test on Nasdaq, if I switch to S&P, I'd have to run the first test, run it through replay, closing partial, and moving the stop, and then I'd have to retest it, closing out moving the stop and leaving them on. So I'll do that on Nasdaq to compare apples to apples. Now, and that's all we need because we're doing apples to apples. We already know that so far in the back test and this week, S&P has done better than Nasdaq. Okay, so since S&P has done better than Nasdaq, that's what I'm looking at possibly trading. If you're trading this strategy, I would select S&P right now as far as what we've seen. So now the point is, so we have enough data. We did a back test that it looked interesting. It looked like it could profit. I did the replay modes to test back, taking the trades on the entry of the break of the high or low. We had good data off that, good profit. And it was enough to say, okay, this week, let's just trade it live. Let's see what it does. And we already knew, because you already know through the back data that it's profitable. So I knew we should be profitable this week. The first 3 days weren't the greatest. The first day taking losses. The second day we made up for that and then was in profit in like $95. And the next day we took losses and then got part of the gains back. Yesterday was a big player in getting to profit. And then, of course, today even played out better in getting even more profit. So we were like 822 on the day, shoving that $64 back in from where I didn't move the stop to break even. So that data has been good. I like where we're at on it. I like that it's profitable. I like that somebody could do this while they're working without staring at the charts. And I'm talking about somebody who doesn't have a desk job. A lot of people have a desk job. They can sit there and have their phone out as well. So I'm talking about every day somebody's working in a coffee shop or somebody's working in, Waffle House, or somebody's working out there on the construction site. Can they, trade off just the signals? And yeah, they can. We already know that. So we want to see if it's systematic, mechanical for them. So I'll do the test on Nasdaq, 3 contracts, but we already know that S&P would play out better. Okay, so we already have the data from the 3 contracts on close and partial. I'll run the replay over the weekend, test it with 3 contracts on just moving the stop and getting stopped out. And then we'll be able to see that on Monday. I'll put it together over the weekend. We'll probably do that Monday night then. If I get it all done, we'll do it Monday night. And it'll be recorded. And I may just do it in a recording because I may end up doing it like 3 or 4 in the morning if I'm up. Sometimes that happens. And do it a recording and upload it. But you'll be able to see side by side how it does the 2 different ways. And then we already know that if you adapted either one of those to S&P, we know that it would be even more beneficial because we see more green days, right? So since we see more green days on S&P right here, where it did get to that level 4, we already know that this outranks as far as the moves to further profit targets. We know that S&P outranks Nasdaq. Okay, so we would know even more profit on that. So S&P would be the one I would go for as what I've seen so far over Nasdaq. A lot of people trade Nasdaq. There's a lot of hype around Nasdaq, and that's because there's a lot of people out there on like Instagram, TikTok. That's all they're trading is Nasdaq, and there's been a lot of hype built up around it. So that even makes it more exciting out there. But I'm data driven for me. I could care less what I see someone do out there. I don't get excited seeing them do something. For me, it's like, okay, I see what they're doing. I know why they're getting into trade. I know why they're getting out or how they're managing their stop. for me, it's got to be data. I love my spreadsheets, always have. So for me, I got to see the data. I got to test it and go, okay, it's all right. But so going out and seeing someone trade, I don't care if it's me, anyone else, and you're watching them trade, I'm going for consistency. I'm going for what I can do every day. And some people do that. There's some people out there doing live trading. You can see them doing it consistently. And then there's other people that don't, and they're marketing to you where they're, and there's nothing bad about it, but you just got to be careful. But there's some people out there that are just doing it for hype, doing it for marketing. They're going to show you the good stuff, not the bad. And that's not what you need as a trader. As a trader, especially in the beginning. That's why I said it. I feel bad for people learning now, because back when I learned, we didn't have all that. There wasn't even TikTok and Facebook, Facebook just come around. So, but this is what you need to see. You need to see the losses too. We got in here on a short. I was almost wicked out, but it went to profit target 1. This was yesterday's. And this is why. So this would have been break even, John, on that. So taking this trade, you'd have been negative a little bit. It did hit profit target 1. You'd have moved your stop to break even and got stopped. So that would have been a 0 trade. So for me, it was a little bit positive because I closed partial. So, and that's why I have to run it back through the full back test, because this would be 0, but then this trade, where we closed 2, we would have, see where it moved to, so this would have been a little more of a winner. I closed 2 here, and then when it closed above this level, I moved my stop, okay, and then got stopped out over here. I moved my stop kind of aggressive. On that one, because it was building that high low. I actually had a channel we drew. So, but it going up, you would have moved your stop all your contracts to one level. So I'll go through and back test it. So if there's no other questions, I will kill the stream. So I want to look real quick. Let's peek, because we got a few things that are still moving down, right? So this is something we have to pay attention to, but we're making a mechanical decision for moving our stop. All of us would have been stopped out here on Nasdaq, and I realize I'm in front of the chart. So all of us would have been stopped out on this larger pullback, okay? There's a signal chance to re-enter, but that's off the power trade indicator. If you don't have that, you're not using it, you're not in. You would actually sat in the negative for a while anyways. This other one was a re-signal, and then it did pull down. You'd be in the positive on that. So what I want to look at is all 4. Nasdaq hit near level 4. It's back between 2 and 3. Okay. S&P closed past level 3. It's between 2 and 3. So pulled back, and it's hanging out. It hasn't gone below the low it made. So we look at Russell and Dow. Those differ. So on that downward move, Russell, here's the downward move, after its pullback, has been creeping more aggressively down than what Nasdaq and ES have done. Okay, it just wasn't a steeper move back either. So we've hit and closed past afternoon, after 12, it actually closed past the next level. Okay, and at afternoon here on Dow, it closed past, but it had already hit here. So we're just now on Dow to where it's looks like it might breach level 3. Okay, so that'll be end results I'll post over the weekend. What level does it hit by 4 o'clock? All right, so I enjoyed, as always, doing this. I'll do that back test and run it on closing out the entire trade just on 3 contracts, so we can compare apples to apples on that. And then, again, I'll record that and get it uploaded sometime. It might be Sunday night, actually. I know that's Mother's Day, but we're doing stuff early in the day. So it just depends on how my days goes. But I'll put it together Saturday, run the retest, and then I'll because it won't be day-to-day charts. I won't have to put that together. It's just going to be end results comparing the 2. All right? So everybody have a good weekend. Take time off, spend time with family, definitely thank your mothers out there for giving you birth, life, and enjoy your weekend. And I'll talk to you later this week.